sort of picks or top 3 picks where actually, Sandeep can invest in?
For asset management companies, I will say one is we can look for Nuvama Wealth Management. We can even look for Anand Rathi. So these are some of the good stocks which we can look for. And for power, at this point of time, I'm not that much optimistic for near terms. So for wealth management stocks, these two are my good picks.
Understood. And with that, our technical guest is also joining us on the show. Welcome to the show, Gaurav.
Hi, Mashi. Good evening.
Good evening. So, we were discussing about this query written to us by Sandeep. He holds 4 lakh rupees of corpus and he's looking for stock recommendations in the power or in the asset management space. So, Gaurav, do you have any picks there?
As far as power is concerned, Tata Power and Adani Power looks impressive, but in that case, at least a 2 years horizon has to be kept. Because from a technical standpoint, as of now, both of them are not on a performing phase as such. They are in a consolidation phase. But from a overall, the business standpoint, both the companies are stellar. I'll as of now, I'll put more weightage towards Adani Power from a short-term perspective. It is trading somewhere close to 600 odd levels. One can take a stop somewhere close to 560 and look for targets close to 640 to 660 in the coming 1 to 2 months.
Understood. So Adani Power is the counter that you should look out for. That is what our experts are suggesting. With that, we are joined by our first caller on the show from Hyderabad. Hi, Dheeraj. Good evening.
Good evening, ma'am.
Yes.
As there is GST update in the tariff, not in the tariff actually, in the
reforms, GST
slab,
reforms.
there is adjustment. Yes, ma'am.
Yes.
So ITC also is a huge company, but it is performing a lot of underperformance is being in ITC.
Yeah.
Since last 1 year, negative returns have been there, and all the FMCG counters are performing. But what's the reason behind ITC not performing, ma'am? If I hold it for the short term and long term, I would like to know both things. Regarding ITC, ma'am, I'm holding 400 shares at 410 rupees, ma'am.
Yeah, I can see that. Understood.
Yes, ma'am.
So,
even it is an FMCG player, why is it not able to perform when compared to its peers like HUL, Britannia, and Nestle, ma'am?
Yes, absolutely. So, Vaibhav, coming to you, since ITC being a strong contender there, but fundamentally the company has not been, performing well lately, but what's your suggestion still for somebody who has invested in a counter like ITC? What's going wrong with it?
Earlier, ITC was not able to perform. The reason was the inflation. But now, as inflation is down in upcoming quarters, we can expect improvement in margins. And in near term, we can expect good upward movement in ITC because as we know that these all companies have benefits of the GST, which we can in all these companies we can expect benefit of taxes in upcoming quarters. So for this particular segment, my view is quite positive, and inflation is reducing, so we can even expect improvement in margins.
Okay. And even the quarterly results were not that great. Gaurav, coming to you on the technicals as well, we can see the charts being in the red and still, going in the downward trajectory there. So what's really going wrong there, and what are you anticipating from the charts?
So firstly, it is a FMCG company which is indulged largely in the business of cigarettes. So that has actually been impacting its core business line and its performance from quite some time now. Apart from this, if we look at the overall structure, it is not too bad from a monthly standpoint. The charts are not at all bad. Yes, some bit of underperformance is there, but that is at large on the FMCG pack on the whole. With this news coming in, I think this is a very negative development for this particular segment, cigarettes. And some more immediate downside is pretty much likely here. A level close to 390, 380 zone is where I am expecting the stock to come down. in the next a couple of days or a week or 2 weeks time frame, and there one can even consider accumulating the stock with a little longer time frame.
Understood, understood. Thank you so much for that. Now let's go across to Snigdha joining us on the phone line from Hyderabad. Hi Snigdha, good evening.
Hi, good evening. So my query is regarding Torrent Power. So I've purchased 100 shares at 1380 rupees.
Yeah.
Since for so long the power sector is underperforming, can we expect good performance in further next 3 months or so like that? Yeah.
Understood, understood.
And also I just want to get some short-term trading idea.
Yeah, okay. So short-term trading idea, firstly, I'd like to come to you, Gaurav, on that. Since the time Snigdha had bought the shares, the stock price has literally fallen, and even the quarterly results, were very weak. So considering all these aspects in mind, are you still, seeing any sort of positivity in the charts? Are you anticipating any sort of bounce back there in the near term, like let's say 1 to 3 months period?
Within a time span of around 1 to 3 months, I think the stock will first go down further to test 1200 odd levels, which is an immediate support level that I can see. Thereafter, consolidation would happen, and then we could expect some kind of a recovery there. All in all, I'll suggest her to shift to Adani Power, as we have discussed earlier in the show also, that it is among the better placed power transmission companies.
Okay, so kindly switch to Adani Power if you really want to invest or stay invested in the power space. That's the word coming in by our experts. Now we are joined by Mr. Murli on the phone line from Bengaluru. Hi, Mr. Murli. Good evening.
Good evening, ma'am.
Yes.
Thank you for taking up my query.
Yes.
Thank you for taking my query.
It's our pleasure, Mr. Murli. Please go ahead.
Yeah. I bought the 700 shares of Lloyd Metals and Energy.
Yeah.
After the recent results.
Yes.
I'm willing to wait for long term.
Okay.
Even then, I am willing to. I like to clarify whether seek your advice whether I can hold for next 9 months to the end of the financial year results.
Okay.
Will I get about 15% return?
15% results?
Return, yeah, per annum.
Return per annum. All right.
Yeah.
All right. So Vaibhav, since Mr. Murli has invested in Lloyd Metals, will he be able to make 15% returns in a period of 1 year?
First of all, Lloyd Metal major business is into the iron ore mining, and what they do is that they do mining of low quality iron ores, and then they do the processing. So that's why their business strategy is quite different as compared to their peers. And company have that ability to deliver robust numbers in upcoming quarters, but numbers are also impacted because of the international level price changes of iron ore. So it is quite very hard to say that stock will surely going to give 15% return or not, because price of iron ore is dependent on the at the international level buying and selling. So I will say it is also dependent on the international things, but yes, company have that ability to deliver robust numbers. If iron ore prices go down from here, so revenue can get impacted. But as we know that iron ore prices are already bottomed out, so we can expect good numbers in upcoming quarters.
Okay, so can expect good numbers in the coming quarters, but still due to global uncertainties, we might not see that much of a return. And with that, we are joined by Siddharth from Guntur on the phone line. Hi, Siddharth. Good evening.
Hi, good evening.
Yes, please go ahead.
I have purpose of 1 lakh rupees.
Okay.
I want to invest in power sector. I choose 2 companies.
Yeah.
One is KP Energy Limited. Currently, it is trading near 422 rupees. And the other is G Power India Limited. It is trading near 350 rupees.
Understood.
Which one is the better? Or should I choose invest in both the counters? I can stay invested in 3 to 5 years.
Okay, and what was the second counter? GE Power, am I correct?
Yes, GE Power India
Okay,
Limited.
okay. Because, we were discussing about the power space, just as we started off with the show. So our expert had suggested Adani Power. So I'd like to go to Gaurav again on this one. Gaurav, do you, still stick with the Adani Power, or between the two, KP Energy and G Power, do you have any sort of pick there?
I'll still suggest him Adani Power only because he's having a 3 to 5 years of time span. And for a power company to actually deliver, it is always best to look at from a longer term perspective. Not even for 1 year, it is 2 years and above. So I think his time frame perfectly suits Adani Power, and it is available at a very attractive price point. It has not performed as such. I think these factors all culminate towards suggesting that this is a good buy at these levels.
Understood. And I'd also like to come to you, Vaibhav, on this. What is your suggestion to Siddharth?
I will recommend that we should not go for the GE Power. I will recommend Adani Power, and second stock was KEI Energy. So we can go for these two stocks.
Understood. And just a quick disclaimer for our viewers that NDTV is a part of the AMG Media Network, which is an Adani Group company, the channel you're watching currently. With that, we have Rabi on the phone line from Guwahati. Hi, Rabi. Good evening. Rabi, are you there on the phone line?
Yeah, I'm there.
Yeah. Am I correct? Am I pronouncing your name correctly?
Yes, you pronounced the name correctly. My name is Rabi and I'm speaking from Guwahati.
Yeah.
My question is that I have some 300 plus shares of Suzlon Energy.
Okay.
At an average price of around 72, like that.
Yeah.
And I purchased these stocks around 8-9 months back.
Okay.
So right now it's in very low level of 57 or 58.
Yes.
So my question is that should I invest more or should I take an exit or what?
Okay. So firstly, I'd like to come to you, Vaibhav, talking about the fundamentals of Suzlon Energy. Are you optimistic? And since he has invested in the counter and the prices have fallen significantly, what would your advice be?
First of all, if we see, Suzlon have delivered very robust numbers in this quarter. Their revenue growth was of 55% on YOY basis, and stock is trading at an attractive valuation. But at this point of time in power sector, we are observing profit booking, and there are means at this point of time, if we want to add, we can, but our view should be for longer duration.
So the view should be for a longer duration. And coming to you, Gaurav, talking about Suzlon in particular, so what are the charts suggesting? Is there any sort of positivity that we can actually see in the near term?
It is all positive as such. Stock might correct somewhat around 8 to 10% from here in the near term. But as I said, power and renewable energy should be considered for a little longer time horizon. If our viewer is having potential to hold the stock anywhere beyond 1.5 to 2 years, nothing to worry about. Utilize the dips that are coming in to accumulate the stock. The stock will perform.
Okay. Thank you so much for that. Now, we're joined by Subbarao from Hyderabad on the phone line. Hi, Subbarao. Good evening.
Good evening, madam.
Yes. Please go ahead with the query.
Then my query is, I'm holding Avanti fee.
Okay.
25 shares.
Yeah.
679.
Understood.
With a short-term view, madam.
So, you're looking for a short-term view for how long?
It's 6 months, madam.
6 months view. All right. So, Gaurav, without wasting much time, I'd like to come to you, since I can see that there's sort of, an upward movement in the stock there on the charts. But still, what do you make of it, and how is Avanti feed looking like from a 6-month perspective?
Firstly, whatever decline or negativity that we are witnessing in this stock prices is largely due to the tariffs related issues. This company also belongs to a sector which is largely impacted by Trump tariffs, the fisheries, shrimps business. Although it drives a larger chunk of its revenue from the Asian market, but still these Trump-related and the tariff issues will have an impact. In the immediate near term, little more trouble can be expected and uncertainty prevails. I don't see any kind of a meaningful up move coming in till the stock is trading below 725 odd level. So the viewer has to be patient enough. It will take some more time to actually recover from the ongoing troubles that are being seen there.
Absolutely. Thank you so much for that, Gaurav. Now, let's go across to Pakshal, joining us from Bellary on the phone line. Hi, Pakshal. Good evening.
Good evening, ma'am.
Yeah.
I'm holding CG Power, 70 shares at the price of 805.
Okay.
So I'm holding from more than 10 months. So
Okay.
the stock is tight consolidation.
Yeah.
So I was thinking to switch to Keynes Technologies or Dixon.
Okay.
So is it good for a long term, or CG Power is a good choice?
Okay. So, since the start of this show, we have been discussing about the power segment, in depth. But still, coming to you, Vaibhav, if CG Power is the counter and our investor, our caller is, witnessing a loss there, but still, so do you suggest him to switch to another counters, or should he stay put with this investment?
Yes, surely we can look for other stock, and Dixon Technology is one of the good stock, as company is taking very aggressively new initiatives which will support their revenue growth in upcoming quarters. So surely we can look for the Dixon Technology rather than CG Power.
Okay, so a positive on Dixon Tech than CG Power. And Gaurav, do you also hold the same view?
Well, absolutely. No doubt that Dixon is a better contender when compared with CG Power. The viewer has also inquired about Keynes. He can even consider that. I think parking part amount in Keynes and park in Dixon would be a better choice, completely shifting from CG Power.
So completely switch positions from CG Power to Dixon Tech is, that's the strong word coming in by our experts there. With that, we are joined by Karthikeyan from Tamil Nadu on the phone line. Hi, Karthikeyan. Good evening.
63 rupees I have purchased 6,000 stock. Now it is near about 47 rupees.
Okay, so Morepen Lab is the counter, Karthikeyan?
Morepen Lab is the counter.
Okay,
Yeah.
okay. So, and you're looking for a long-term view or a short-term view?
Seeing in the TV, madam. Okay, I will just see.
Sorry?
Yes.
Karthikeyan, I would request you to please turn down the volume of your television because I'm not able to hear you properly. Yes, Karthikeyan, please go ahead.
Both short and long term.
Both short and long term, understood. So firstly coming to you, Vaibhav, on the fundamentals of Morepen Lab, how are you viewing the company fundamentally?
First of all, if we see 16% revenue is from the USA, and which can impact its revenue growth pace in upcoming quarters. So we can look for hospital stocks rather than going for the Morphin laboratories. There are other opportunities available in the market. So my view is quite pessimistic regarding the Morphin.
Okay, and quickly, Gaurav, what's your view on Morepen Lab? What are the charts suggesting?
I do think that Morepen is not a good choice at the moment. More downside still remains. 42 and 40 are the immediate supports, and still they are around 15 to 20% where the stock stands currently. So not good at the moment.
So not good at the moment. With that, we are joined by Manish on the phone line from Mumbai itself. Hi, Manish. Good evening.
Yeah, good evening. Thank you, Himanshi.
Yeah.
I am looking into invest into Jindal Saw Limited.
Okay.
It has recently touched 52-week low.
Yeah.
But what I have seen, it has a history of good performance for last 25 years. So I think turnaround may be on the round. What are maybe the bad factors? Just can tell me what it is.
Okay, so Vaibhav, since Jindal Saw is currently trading at 201, and if I look at the valuations, it's pretty attractive there. But still, do you think that it's a counter, a strong counter for somebody who can invest in it for a long-term perspective?
Yeah, if we see Jindal Saw is currently trading at a PE of 7, which is quite low as compared to industry. But if we see their quarterly results, they have reported 17% decline in their revenue growth. And the reason is that in overall segment there is a stress. In overall pipe segment, we are not seeing very aggressive upward movement which can support their revenue growth. So I will say that we should wait for a while. We should wait that how industry changes. As per the changes in the industry, we can enter in the upcoming quarters, not in
Okay.
near term.
Okay, okay. Thank you so much for that. Now we have Nitin joining us on the phone line from Ahmedabad. Namaste, Nitin. नितिन क्या आप मुझे सुन पा रहे हैं? I think I've lost the line there, but we have Nitin's query with us. He holds 200 shares of ITC Hotels at 230 apiece. He's looking for a long-term view on the counter. So since ITC, is a strong company, and ITC Hotels is also a strong, counter there. So Vaibhav, how are the fundamentals of the company looking like? And currently it's also trading near its one-year highs as well. So what's your sense?
First of all, if we see stock is trading at a PE of 76, which is quite higher than the industry PE. Company is taking good initiatives. They have that ability to deliver good numbers in upcoming quarters, but still PE is quite high as compared to industry. And if we see that DIs also have reduced their stake in this particular company, so my view is quite pessimistic for near terms. If that stock is available at an attractive valuation in upcoming quarters or time, so surely we can enter.
Okay. And since our caller was, basically a Hindi spoken person, so I would request Gaurav to actually just answer it in Hindi so that he's able to understand what should he be doing with this investment of his. Gaurav, over to you.
Yes, तो जैसे उनका क्वेरी आईटीसी होटल्स को लेकर था, अभी वैभव ने भी बताया इसका वैल्यूएशन हाई है. मैं भी इस चीज़ से सहमत हूँ. अगर हमें लार्जर हॉस्पिटैलिटी स्पेस को देखना है, टारगेट करना है, तो आई थिंक इंडियन होटल इज़ अ बेटर चॉइस व्हेन कंपेयर्ड टू आईटीसी होटल्स. सो अगर हमें बड़े ही ब्रैकेट में रहना है तो हम इंडियन होटल्स को कंसिडर कर सकते हैं. वी कैन स्विच. और साथ ही साथ में अगर हमें थोड़ा सा एग्रेसिव टच ऐड करना है तो आई थिंक वी कैन इक्वली डिस्ट्रीब्यूट इट अमंग टू इंडियन होटल्स एंड लेमन ट्री.
Thank you so much, Gaurav, for that. Now we have a WhatsApp query written to us by Mansingh from Andhra Pradesh. So he holds 10 shares of Control Print and he bought it at 730. He's looking for a long-term view on the counter. So Vaibhav, how are the fundamentals of Control Print looking like? Do you have, are you optimistic on this counter?
First of all, stock is trading at a PE of 12, which is quite less as compared to industry. But in this particular segment, we are not expecting very robust numbers in upcoming quarters. So my view is quite pessimistic in near terms. But if things improve in upcoming quarters, then we can think about this particular stock.
Okay. Now let's quickly go across to Devayan, who is joining us on the phone line from Bengaluru. Hi Devayan, good evening.
Hello, good evening, ma'am.
Yeah, please quickly go ahead with your query.
So my question is that I have bought 3 lots of JSW cements.
Okay.
So should I keep it for a long term or should I move it to another stock?
Okay, JSW Cement is the counter. Firstly, coming to you, Vaibhav, what's your sense on JSW Cement quickly?
For cement industry, my view is quite positive, and surely we can hold JSW Cement for long term or short term, because company have that ability to deliver robust numbers in upcoming quarters.
Okay. So you can stay put with JSW Cement. And Gaurav, quickly coming to you, what are the charts suggesting?
Nothing, lack of data.
So with that, gentlemen, I'm afraid that we are running short of time on the show. But thank you so much for always being there and patiently answering all our viewers' queries. Thank you so much. And viewers, with that, it's a wrap on this edition of Ask Profit. But please don't go anywhere as we have a lot of action for you all on the other side of the break. So stay tuned.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses.
Markets rally for the third straight session on the Prime Minister's GST optimism. The auto index leads the charge, emerging as the top gainer, while most sectors end in the green. Mid-cap and small-cap indices outshine the benchmarks. SEBI suggests relaxed IPO norms for companies with market caps above 50,000 crore, offering more time to meet the 25% public shareholding rule. Prime Minister Narendra Modi speaks with Russian President Vladimir Putin just days after Putin's high-profile meeting with US President Donald Trump in Alaska. The Prime Minister reiterates India's consistent stance advocating for a peaceful resolution to the Ukraine war. Chinese Foreign Minister Wang Yi meets External Affairs Minister S. Jaishankar, affirms the maintenance of peace and tranquility along the India-China border while hinting at a potential reset of fractured ties between the two countries. Prime Minister Narendra Modi holds a strategic meeting with top economic ministers and officials to assess the state of the economy. Finance Minister Nirmala Sitharaman, Commerce Minister Piyush Goyal and senior officials including DEA Secretary Ajay Seth and Chief Economic Advisor V. Ananta Nageswaran are in attendance. Prime Minister Modi meets Group Captain Shubhanshu Shukla at his residence in Delhi. Shukla gives the Prime Minister an Axiom 4 mission patch showing pictures of the Earth taken from space. Meanwhile, Donald Trump and Ukrainian President Zelensky are set to meet in Washington later this evening for key bilateral talks, including the peace deal with Russia. Ahead of the talks, Trump says Zelensky can choose to end the war with Russia almost immediately if he wants to. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. It's our top focus today. The Prime Minister's GST bonanza lifted sentiment on the street with the Nifty settling just shy of 24,900 and the Sensex closing about 600 points higher. Mid and small caps, however, stole the show, gaining over 1% each as broader markets outperformed. Most sectors ended in the green, led by autos, which was the star performer on expectations of a GST rate cut. Let's go across to Harsh for the complete market wrap.
Well, the GST announcement dominated markets today. We closed 1% higher on the Nifty, 250 points gain. We were around 150 points lower from, in fact, the top of the day when it comes to how the Nifty moved. So from the high of the day, we were down around 150 points, but nonetheless 1% higher on the Nifty. So that's the one key positive. The breadth is what aided the Nifty as well. In fact, we had nearly 40 stocks in the green versus just about 10 to 11 stocks in the red at close today, which was again a positive. The tilt of stocks within the red, in fact, was more on the IT side of things. A little bit of pharma, a little bit of healthcare was where some bit of possible negativity was, but outside of that we saw a solid coat of green across the board. But what we also saw with regard to some of the gainers was it was dominated in auto and consumer durables. Also Nestle was one of the other ones, so FMCG was also one space which did fairly well in trade. But talking about consumer durables, and let's switch over to sectors, that will give us a perspective. 4% higher on the Nifty auto, 9% higher on something like a Maruti which sits on the Nifty 50. What a move for a stock which hit its life high on a day like this. But more importantly, it's also the consumer durable space which was in focus, and within consumer durables, it's all of those washing machines, refrigerators, television sets, even the manufacturers of these, something like an Amber, Dixon, all of those came into the spotlight and did very, very well in trade. Some of them moving 5% plus in trade. So some real big moves seen on some of those counters. Also consumption, anything relating to consumption, footwear stocks, something like a Relaxo, a Campus were all buzzing. You also had hospitality stocks, a Lemon Tree, Chalet and the like were doing fairly well for themselves. So all of that consumption basket did very well in trade. And within the sectors, you'll see the Nifty IT down around 0.5%, led by the heavyweights. You'll also see pharma and healthcare largely flat on a day when there was plenty of zinc on counters. Rural, the Nifty Rural Index also did fairly well for itself. Real estate did well, 2% higher. Metals were the other space where we saw some zinc 1.9% higher, led by JSW Steel. So all of that was what really led to the outcome that we saw today. When you're looking at the advanced decline as well, 2:1, largely it tapered off gradually as we inched towards the close. And what we saw on the Nifty mid cap and small cap, they held up much better than the Nifty large, or rather the Nifty 50. And we saw 1.2% higher on the Nifty mid cap, 1.3% higher on the Nifty small cap. So those held up fairly well for themselves, and that's how it played out. Even when you're looking at some of the BSE 500 top gainers, top losers dominated by this theme, but along with it, also some stocks affected by the PVC, possible additional duty, and some of those names also creeping in. Something like a Supreme was also part of that list of gainers in trade.
Thanks for that, Harsh. Moving on to some news that just came in a while ago. SEBI has proposed easing IPO rules for large companies valued between 50,000 crore and 1 lakh crore. In its consultation paper, the regulator has also favored retaining the retail investor quota at 35% in IPOs, rejecting suggestions to cut it to 25%. So for more on these proposed changes and their implications, let's go across to my colleague Charu Singh.
So the market regulator, Securities and Exchange Board of India, has come out with a very interesting draft paper, which is going to affect the retail investors as well as big companies gearing up for IPOs alike. So what has been proposed? Firstly, smaller firms, smaller companies which have a market cap of up to 50,000 crore rupees are largely unaffected by this. But companies that have a market cap of about 50,000 crore to 1 lakh will have to give shares worth about 5,000 crore rupees to their retail investors. Companies that have more than 1 lakh crore rupees market cap, they are going to have to raise about 6,700 crore shares to their public shareholders, or about 2.75% of their public shareholdings has to be garnered. Apart from this, giant companies are the ones which are going to be affected a lot, because companies which have a market cap of about 5 lakh crore rupees or more than that will have to shell out over 15,000 crores worth of shares to the public shareholders, but they can keep the percentage to 1% or 2% and will be given enough amount of time to reach the 25% share threshold. So what is this 25% threshold thing that SEBI is coming out with? First, companies will be given time to reach the 15% public shareholding, and then they will be given more time to reach 25% shareholding. If a company is listing below 15% shareholding, they will be given 5 years to reach 15% mark, and then in 10 years, they will have to reach 25% mark. If they are listing above 15%, they will have to reach 25% mark within 5 years. Now, this is something which eases the IPO norms for the bigger companies, because they will not have to shell out a lot of public shareholdings immediately. Apart from that, the regulator had earlier come out with a proposal to reduce the retail participation from 35% to 25% in large IPOs, but it has, based on some feedback that it might have received, refused to go ahead with that step and taking those proposals back. But public consultation on these new set of proposals are going to be open till September 8th.
Thanks so much for that, Charu. And let's shift gears and moving on to some global news, but with significance in India. Ukraine's Volodymyr Zelensky and European leaders will meet US President Donald Trump in Washington later tonight to map out a peace deal amid fears that the US president could try to pressure Kyiv into accepting a settlement favorable to Moscow. The leaders of Britain, Germany, France, Italy, Finland, the EU and NATO all are hoping to shore up Zelensky at a crucial diplomatic moment in the war and prevent any repetition of the bad-tempered Oval Office encounter between Trump and Ukraine's leader in February. So for India, the outcome of these talks, if you could remember, could stabilize global energy markets, ensuring continued access to discounted Russian oil, while a potential US shift towards Moscow may also hopefully ease tariff pressures, allowing New Delhi to maintain its delicate balance of ties with both Washington and Russia. Meanwhile, another significant development that came in earlier today, Russia's President Vladimir Putin dialed Prime Minister Narendra Modi. Now remember, this call comes days after Vladimir Putin met US President Donald Trump in Alaska to discuss the end to the Ukraine war. Standing by to give us all of the details and a quick update on what this means for India, my colleague Mohammad Ghazali from NDTV now joining us with more on this. Ghazali, let me come to you. Take us through all of the details, what the two leaders discussed and what this actually says about India's strategy.
See, two things. One, that even Russia is hinting that all these pressure tactics of issuing threats of tariff won't work with India, because US wants India to not buy oil from Russia. India has categorically rejected the entire idea, saying that we will continue to buy oil from Russia, and that figure has not come down. Ironically, Mr. Trump, while he was on his way to Alaska to meet Mr. Putin, had said to reporters that he has got to know that India has cut oil purchases from Russia and he may not put secondary tariffs on India. Keeping that aside, the phone call between Mr. Modi and Mr. Putin certainly shows the growing and deepening relationship between India and Russia. Russian president also backed India's consistent approach towards the Russia-Ukraine conflict, when the Prime Minister said that dialogue and diplomacy is the only way to end this conflict. And at the end, even US had to bring both the parties to negotiating table. And today, Mr. Zelensky will be meeting later tonight with President Trump, with a host of other European leaders, and perhaps there will be some solution to this entire crisis of Russia and Ukraine.
Right, Mohammad Ghazali, thank you so much for that update. We'll continue tracking this very crucial meeting that's going to take place tonight between Donald Trump and Zelensky, and of course the developments that follow after this very crucial phone call. Let's move on to another foreign minister, and this time from China. Chinese Foreign Minister Wang Yi has reached India for his two-day visit and is currently holding a key bilateral meeting with External Affairs Minister S. Jaishankar. Both sides are expected to explore fresh confidence-building measures to maintain peace along the border. And this visit is also setting the stage for Prime Minister Narendra Modi's upcoming trip to China later this month. But for more perspective and insight into this, my colleague Rishabh joining us with more details.
Right, Sanjana, what we've picked up on this very crucial meeting that is currently, it's done now, but it started around 6:30 p.m. It's concluded now, and what has come out of it is a clear sort of progression in the thaw that India and China have been witnessing, both on a diplomatic front, on a trade front, on an economic front, as well as on any other multiple fronts that India and China are engaged on. Now, these two, S. Jaishankar and Wang Yi, both were expected to talk on pilgrimages, on river data sharing, on connectivity, border trade, people-to-people contacts, as well as bilateral issues. And I'm reading out a statement that has come out that Chinese Foreign Minister Wang Yi has put out, and he's actually opened up Indian pilgrimage to two sacred mountains in China's Zhejiang Autonomous Region. So clearly a step in the right direction. What we're seeing is India also embracing multilateralism like never before. Remember a couple of years back when COVID had hit the world, you constantly had the world sort of getting into more and more silos. More and more countries were trying to operate independently. But now what we're seeing again as part of this US tariff fallout is that India has and is trying to grow closer to China. India is also going back to its old friend Russia. We've seen Prime Minister Modi having these phone calls with Zelensky, with Ukraine, with Russia. And we've seen the sort of India embracing multilateralism yet again in the face of somewhat sour ties with the US that we've seen, which have been coming out in the way of secondary sanctions and tariffs. So that is what we're picking up. He's also, the Chinese Foreign Minister is also set to meet Prime Minister Narendra Modi tomorrow. So that is an important one, like you said, ahead of Prime Minister Modi's SCO visit in China. So that is something that we have our eyes peeled on.
Absolutely, Rishabh. Eyes and ears open for the next couple of days, which actually is very crucial, especially in the run-up to August 27th. Meanwhile, let's just play out for you the reactions of both External Affairs Minister and Foreign Minister of China, Wang Yi.
The exchanges and dialogue at all levels. We maintained peace and tranquility in the border areas and resumed the Indian pilgrimage to the Mount Garampochi and Lake Mapayonzo in the Xizang Autonomous Region. We showed them up confidence to dispel interference, expand cooperation, and to further consolidate the momentum of improvement and development of China-India relations so that while pursuing our respective rejuvenation, we can contribute to each other's success and provide the most needed certainty and stability to Asia and the world.
When the world's two largest nations meet, it is natural that the international situation will be discussed. We seek a fair, balanced, and multipolar world order, including a multipolar Asia. Reform multilateralism is also the call of the day. In the current environment, there is clearly the imperative of maintaining and enhancing stability in the global economy as well. The fight against terrorism in all its forms and manifestations is another major priority. I look forward to our exchange of views. Overall, it is our expectation that our discussions would contribute to building a stable, cooperative, and forward-looking relationship between India and China.
Moving on, meanwhile, the Prime Minister also chaired a high-level meeting with top ministers, secretaries and economists to discuss the roadmap for next-generation reforms. Sources have told NDTV Profit that Finance Minister Nirmala Sitharaman, Commerce Minister Piyush Goyal are attending this meeting. It also includes representatives from the Agriculture and IT ministries. Economic Affairs Secretary Ajay Seth and Chief Economic Advisor V. Ananta Nageswaran are some of the top officials present at this meeting. Meanwhile, there's big relief likely on the way for car buyers across categories as under the proposed two-slab GST structure, taxes on small cars that's currently at 28% plus cess could be cut to just 18%. Even mid-sized and larger vehicles, which now attract as much as 50% tax, may move to a uniform 40% rate. The centre is working on a comprehensive GST rate revamp that could reshape auto affordability in a big way. And my colleague Shrimi has all of those exclusive details.
Well, absolutely, under the proposed regime, cars and tractors could see lower tax rate as part of the government comprehensive GST rate restructuring blueprint aiming at simplifying taxation and boosting demand across all sectors. So as part of GST regime revamp, the government actually proposed two broad classification of cars based on the engine capacity. Now, cars with engine below 1200cc will be classified as small cars, while those with engine above 1200cc will fall under the bigger car or the luxury car category. Now, small cars, which is currently taxed at 28% GST plus cess, could see a sharp rate reduction to just 18%, potentially making entry-level vehicles more affordable. Meanwhile, the mid-sized to big cars, including SUVs, sedans, could move to a flat 40% GST, down from an effective tax burden that currently touches 50% on these high-end cars. Now, move is, of course, a part of broader efforts to shift to a two-slab GST structure by dropping existing 12% and 28% tax slab, and also to kind of remove ambiguities around the definition, the tax treatment of the automobile under the GST tax regime. Government, in fact, also eyeing a cut on the tractors from the current 12% to just 5%. Now, there are several categories of tractor, but most of them actually fall in the 12% bracket. The move is, of course, to boost rural demand ahead of the festive season, and industry player like Mahindra and Mahindra said to be benefit significantly from this lower tax rate if implemented.
Meanwhile, the government's proposed GST revamp could shift India's auto sector into a new gear with significant tax relief likely for small cars and other segments, all depending on engine capacity. Puneet now joining us with more on how this rate rejig could impact car buyers and the industry.
Well, small cars could see big gains, and if you're looking to buy a small car, you might want to just wait for a few weeks, because amongst the GST norms that are coming in, the auto sector and the small car segment specifically could see some big gains. Now, amongst the measures that are coming in, cars below 1200cc could see a reduction in GST rate from 28% to just 18%, and that will be a big fillip to automakers, especially the likes of Maruti Suzuki, that account for roughly 50% of their sales in the domestic market coming from the small car space. So we could see that categorization being changed to basically the kind of categorization specifically in engine capacity rather than vehicle type, the current norm. Now specifically we have seen that Maruti Suzuki, as I mentioned, 50% of the sales, they operate 9 brands like Alto, Bolero, Celerio amongst others, and these could see a positive fillip going forward as well. Which are some other beneficiaries include the likes of Hyundai as well as something like Tata Motors. For Hyundai, they would operate brands like i10, Neos as well as the i20, and these could get another positive fillip. They account for roughly 1/3 of the total annual sales for Hyundai in India, while Tata Motors has brands like Tigor, Tiago as well as Altroz, and these could also get that benefit going forward as well. When you look at the tractor segment, the GST rate could fall from the current 12% to 5% and will be positive for the likes of Mahindra & Mahindra, Escorts as well as something like a VST Tillers as well, all of which are up today in trade. The other ones include the likes of the two-wheeler makers, specifically the entry-level makers in the 100cc space. The likes of Hero MotoCorp are getting the benefit. Bazaar, which has reported negative to flat sales in the domestic two-wheeler market over the last 8 to 9 months, could get a positive fillip, and we're seeing the stock is up over 4% today as well. That could be the big story, but definitely Maruti is the stock of the day with the highest gains that we've seen in the stock since June of 2024.
Meanwhile, Prime Minister Narendra Modi met with Group Captain Shubhanshu Shukla at his residence in Delhi, and they met a day after the astronaut returned to India from his historic visit to the International Space Station. Shubhanshu Shukla gifted the Axiom 4 mission patch to the Prime Minister and showed him pictures of the Earth taken from the International Space Station. The discussion between the two focused on leveraging Shukla's expertise to help propel India's space aspiration. Now, if you remember, Shubhanshu Shukla was part of the Axiom 4 private space mission, which lifted off from Florida on June 25th and docked at the ISS on the 26th of June. Moving on, Mumbai has been battered by heavy rainfall, with the IMD now issuing a red alert for the city for the next 48 hours. In view of the student safety, the BMC has also declared a holiday for all schools and colleges tomorrow. The relentless downpour has led to waterlogging in at least 14 low-lying areas, throwing traffic out of gear. So far in August, Mumbai has recorded 610 mm of rain, already above the monthly average of 560 mm. The civic body is urging residents to step out only if absolutely necessary and has activated its emergency helpline 1916 for assistance and official updates. My colleague Paras now joining us with a ground report.
Rightly said, it was a very heavy day for Mumbaikas as it was raining very heavily throughout the day. There was a major waterlogging around the Mumbai city. There are many low-lying areas where there were so much of waterlogging, mainly in western suburb and in eastern suburb. There were waterlogging where many things was disapparated and there are a few more hours to go, a few more days. The alert has been given by the weather department where this heavy pouring will happen. So tomorrow also a red alert has been issued by the weather department regarding the rain which has happened today, and tomorrow also there is a red alert. In the red alert which has been given by weather department, BMC has said that there will be the holidays in school and colleges tomorrow. As we speak, there is no rain in western suburb for now. It's been more than an hour. Rain had stopped and there is no waterlogging around Andheri and suburb for now. Over in eastern suburbs and Bhaikla, Dadar, Lower Parel, Worli, the water has no waterlogging has been there since last half an hour to 1 hour. So right now the situation in Mumbai, western suburbs and in eastern suburbs are going back to normal, but still there is a red alert tomorrow. Anything can happen and precautionary measures have been already taken by the BMC and the government. So it will be very much important. The day tomorrow will be very much important because the red alert has been issued for Mumbai and the nearest place to Mumbai. It will be a very, very important day as there were many things which was happening. There was a lot of traffic because of the continuous pouring of rain. So tomorrow what will happen, it will be very, very important to see.
Right, we are in fact hoping for the best, and remember the BMC has announced that all schools and colleges will remain shut tomorrow in Mumbai. Moving on, India's reliance on imported semiconductors and oil leaves it exposed to the will and supply chains of other nations. That's the message coming in from Adani Group Chairman Gautam Adani, who spoke at the 75th Foundation Day of IIT Kharagpur, and he described self-reliance as the country's second freedom struggle, India's journey towards becoming truly Atmanirbhar. Let's listen in.
In the case of military dependence, many of our critical systems are imported, bringing our national security to the political will and our supply chains of other nations. This is the freedom we must now fight for, the freedom of self-reliance, the freedom of Atmanirbharta, if we are to be truly free.
And that's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak.
Sandeep Tandon, founder and CIO of Quant Capital, now joining in to help us make sense of everything that we've seen. Sandeep, today is a day for the believers, isn't it? Those who over the last few months, which have been quite patchy, dug in and thought that yes, India will respond in a way that bolsters the domestic economy. What would you do if you were sitting on the sidelines today? And how do you look at all of the events of the last 72 hours or so?
See, obviously the background was perfect. We have been talking about the FII short position is significantly large. Sentiments, if you really look at because of that Trump-related tariff or the noise which is there in the markets, obviously people were slightly anxious, so the overall exposure was low. So I think it was more of a confidence crisis which we have seen in last 1 month. That's the reason India underperformed both from emerging market perspective and developed market perspective. And obviously now this boost has come, or bazooka sort of thing, which announcement has come. So obviously it is very domestic centric. I think government has taken right step. Industry has been talking about rationalization of GST for a while, but nobody expected it will come with this manner. And that's the reason market have obviously rallied. So people will be forced to cover the short position and some confidence will come back, which was slightly missing. So I think it was a background which was there. That's the reason we have seen this reaction. The challenge is what we have to see, how quick will be implemented, what happened in next 2 months time, 1.5 months time, whether people will defer their decision of particularly four-wheelers or two-wheelers or heavy item, where household item and the food item, you can't make any deferment plan. But can you defer it? So whether buying will come with a gap or some sort of lag, that's what we have to see. But as of now, obviously, it's a great sentiment booster, and we hope that consumption will pick up.
Sandeep, of course, Sandeep Tandon from Quant Mutual Fund with us. And Sandeep, the question would be, would you preempt no big negatives on the global front and position your portfolio towards consumption and be largely invested, even if you had some cash, let's say, ahead of this event? Now, would you change that course?
See, if you analyze, Miraj, our portfolio, we have been largely domestic centric. We have been avoiding this global exposure, except pharma, because pharma we strongly believe America also does not have any choice but to buy from us. So if you exclude that thing, largely domestic centric thing, and obviously consumption which was slightly affected, and if this can be a booster. So I think it's a more of a confidence boosting exercise rather than saying that number will be visible on immediate basis. I think this was much needed support because capex was getting deferred. People were not willing to take any action or any steps on this. So I think some clarity will emerge, but I think it's too early and too premature to really celebrate. Let's see, look at the fine print doesn't come, but directionally is definitely very powerful.
Sandeep, in agreement with the kind of direction that the market has seen as the biggest beneficiaries, your EMS players, your consumer durables, your autos at the forefront of this?
So obviously auto is definitely consumer durable also, but in consumer durable and in select auto also, we have to look at the concern which we have in the market for last, if you look at the last numbers, and most of the companies have talked about inventory, So you have very large, meaningful inventory in the system. So that also has to be cleansed first. Then, so that could be a very challenging phase, whether those inventory at the dealer level, whether inventory at the company level. So because the GST angle comes into picture. So I think that also has to be cleansed. So that is a very important thing. And as I was saying in the beginning, whether people will defer the decision. See, in food, you can't, okay? But in heavy items, whether it's auto or consumer durable, also to a certain extent, people can defer. So we have to be very careful. I think my personal assessment is that since government has already made this announcement, logically, they also understand the situation. So logically, they should be making this announcement much before the Diwali itself, maybe much earlier. Maybe one can quantify and define it. This is the Diwali Dhamaka which we have, or the gift which is coming. Now, we have to also understand what balancing acts come into the picture, because very large amount of 28%, is there, so whether that get compensated in some form or other, those maths we have to really look at. But I think the intent is right direction, because volume can pick up. So I think keeping in mind whatever is happening in the industry, I think is a very, very constructive step which government has taken. And let's wait for more clarity. But prima facie, last week also I said neither I'm too bullish now, not too bearish. Okay. Something similar stand I'm saying, slightly constructive background was there. So one should optimize this opportunity and increase domestic sector exposure if somebody is sitting on cash.
Even there, even on that domestic exposure, would there be a tilt now towards consumption? I heard you say in your opening answer that consumption seems to be the so if you had an X percentage of capex oriented place and X percentage of consumption, would you change that tilt a bit more now?
See, market has already showcased that the price action is already clearly visibly.
Exactly.
The gaps are very high. So which means that smart shifting has already begun, and I think it can only gather momentum. Okay, so it's a very simple thing. See, Neeraj, one important thing which we want to highlight, if you really look at last 6-8 months move in India, all the new age companies have done better because it's not they were cheap, they were very expensive and still expensive, but they have a trigger for growth. Now other consumption beaten down name get a visibility of growth coming back, and valuations are anyway attractive, whether it's a consumption names or two-wheeler names or any durable name. I think money will shift from these high-end new age companies towards some of these value theses where growth is more visible now as compared to which was missing earlier.
I'm wondering if this is the time to look at the broader markets and small cap players more closely, Sandeep. Of course, your financials, your IT already in focus with their CISOs, auto right now. But is this the opportunity to look at maybe smaller companies which could really scale up quickly with this kind of GST boost? Just your thoughts on that.
So logically, yes, because given the low liquidity, the impact cost is much higher. So obviously the price appreciation in these names will be far higher than the large cap name. But one has to be very selective and has to be very choosy. One should not get carried away because something has changed. As I said, very important to assess how the current quarter, basically the September quarter would be, whether the cleansing part of the inventory will be sorted out, or whether you want to talk about how the numbers will bottom out by September. So that's a call one has to take, whether the market has already factored in or something still pending. So I will not be very aggressive, but it will become a very stock specific opportunity where one has to be very calibrated in terms of looking on all these data points and then taking a decisive call rather than just getting carried away. Yeah, this has come down, let me buy a basket.
Sandeep, the other one argument on valuations is that we still are about 22 times FY26 and therefore not necessarily cheap. But we were looking at some data in the morning, and MSCI India has underperformed MSCI EM quite significantly. I think 17% over the last 1 year. Valuation premium also that our analysts calculated is the lowest since April 2021. FIs are short. The overall holding is sub 16%. Do you think that changes if the global piece doesn't worsen from here? And could that give further tailwinds, if at all?
See, Neeraj, we have to understand that if we go back in our history, right from 1991, 92, when we have seen a crisis, okay, I think Indian entrepreneurs have always come back with the bang sort of thing. So I think this crisis also is very important how we navigate this thing. I think government has showcased a willpower, not surrendering to the US thing, protecting our local interests. And I think the world is watching us, It's not like it might upset the market participant from a very near-term perspective, but if I look at from a government stand, from a longer-term perspective, we are giving a very clear edge that China was not willing to bend. Russia was beyond their control. And if India also have taken a very strong stand, I think it's a clear message that US relevance in the global markets are declining, and Trump will act as a catalyst in doing that. NATO countries' confidence is also low. Though a lot of people surrender and beg, to work out because a lot of things are dependent on US market. Unfortunately, with India is very limited, the impact will not be very meaningful. And in fact, recollect this is what government has done. The real impact will be 0.3, 0.5% of GDP. If they can address through GST route, which they have talked about, I think things will be sorted out. So maybe there could be some industry-specific pressure, but largely industry will look for a newer opportunity, newer segment, newer region or geographies to export. And I think things will work out. I think that we have to adapt new environment rather than be dependent on somebody's mood and the swings which we are not. You can't plan your capex based on the swing of or mindset of an individual. So I think from a larger perspective, great news for India, because every crisis I have seen, India has emerged, entrepreneur has re-emerged, and that's the way I define this opportunity. Maybe short-term pain. That's the reason India has underperformed market in last 1 year perspective, last 1 quarter, even last 1 month perspective. But it's a call we have to take. India has been outperforming in last 4-5 years. So 1 year of correction and consolidation also we go through it. And if it's something constructive from a longer term perspective, then I will go with this thesis that from a longer term perspective, it is making sense. And it's a game of P multiple or the perception, how the perception. And I think India is demonstrating that is a new emerging leader, new thought leader. They want to create their own legacy. They want to create their own benchmark. I think grounds are perfectly set from a longer term perspective. So one should not get capitulate or give up in the recent turmoil which is there. So I think if somebody has a longer term perspective, which we as an institution we have, I think it's a great opportunity to participate in the main market.
All right. Before we let you go, Sandeep, just a thought on whether you would look at IT more constructively now. I mean, that's the next sort of moonshot, isn't it? Once things clear up here, or do you think fundamentally this is something you'd want to stay away from? Just your thought on IT.
So, yeah, but if you really look at it from a very near-term perspective, from all this GST, there's no impact. But I think they are closer to the neglected territory, which we generally try to look at. So we also have started adding some of these large-cap names in our portfolio. But again, I'm going to wait and watch, as I said, maybe by September quarter. So by mid-October, I think what should be factored in this could be the last quarter and earning cycle should pick up. So if somebody wants to be slightly more adventurous, one can nimble now. But if somebody wants to wait for more clarity, one can wait for it. So we have started adding in our portfolio, but our stand is still not very aggressively to go all out and build exposure. I think time has come to rebuild some exposure depending on the opportunity from company to company.
That's very interesting to hear, Sandeep. If you're adding IT and rebuilding exposure, at what end? Are you looking at mid-cap? Are you looking at AI focus as a filter? How are you looking at these picks
Predominantly large cap, because over ownership is there in the mid-cap. People have made a lot of money in the mid-cap space in the last 1.5 years. I think that's the area which is grossly overowned, and they're equally expensive also. So we'll prefer large caps name where ownership has gone down significantly and they're more attractive and they're more liquid also.
Sandeep, just one final question from mine, because you mentioned that you focused on domestics, but you also mentioned that some of those domestics, particularly staples, are and continue to be expensive, and they continue to, the regional players continue to chip away at those market shares, right? I've bought a lot of stuff on my phone from very homegrown brands which appear on Instagram, etc., etc. So a lot of products which I would have traditionally bought from staple companies are now being bought by local brands. Do you buy into staples because they haven't performed as yet and there is a consumption boost, or are there other consumer plays which are better?
So I think within consumption staple, my focus is also on the food company. Two specific reasons. One, obviously, even from, let's say, many items from 18 will not be removed, but if it belongs to food category and mass consumption category, will be moving to 5%. That's the way we understand. And second thing is very important to understand is that when it comes to, you can experiment with some amount of other product, but when it comes to food item, I think the quality, the brands of some of these established companies, not necessarily MNC companies, even Indian-centric companies also, people prefer to go with quality names when you consume anything. So that's the reason I'm saying food companies, specifically food companies in the staple space, is our focus area, not in general.
Okay. Thank you so much, Sandeep, for speaking with us today.
Well, we are at the Mahindra launch, and it's an interesting one to say the least. And now being joined by Mr. Rajesh Jadurikar, the Executive Director at the company. Thanks so much for joining in. Giving us time here at NDTV Profit. 4 concept cars are standing across the Vision S right now. Talk to us a little bit on that, because back in 2022 when you launched some of the other concepts, you have followed through on that very, very well. With these so starting question on the 4 the 4 new concepts that you've shown, how early can we expect that to come to the market, and what's the expectation that you have for that?
Yeah. Puneet, firstly, thanks for being with us. I think this is your first 15th August event with us, and this is something that has become a bit of a Mahindra habit, which we started with the launch of the Thar 3-door in 2020. And then, every year we've done something, and we kind of try and synergize all our efforts to get out a story. Today's story is around our vision for 2027, 2030, and our global vision. One of the reasons we wanted to call this out as a global vision for 2027 is we often get asked questions by analysts such as you on what is next for us, and are there still white spaces which are open, or are we, have we saturated all the opportunities that we have? And we kind of said we should use today to call out what those white spaces are, and hence what's our business strategy, right? So this is not just about a design strategy or a design presentation of concepts or engineering presentation of the platform, but a business strategy presentation. So just some quick numbers, if I may. We have what we call the core SUVs, right? So we've excluded car crossovers, we've excluded MPVs, and we say, okay, what's really the size of the core SUV market in India? And in spite of all the growths we've seen over the last 3 to 5 years, core SUVs as a percentage of passenger vehicles is still only 30%, right? Which means that there is a penetration and a headroom to grow very rapidly. Also in the global market, and today in our presentation you would have seen we've compared ourselves with a couple of luxury SUVs. And our platform is very comparable to luxury SUVs in multiple ways. So there is a global opportunity as well, because luxury SUVs or premium SUVs are just 5% of the total global market, right? So if we are able to bring luxury SUV kind of offerings to the mass market, that could create a disruption as well. So really what we are trying to say is, as we get 2027 onward, there are a lot of white spaces, and you've been an analyst in your past life, which analysts and media often ask us this question, where are the white spaces? Today is a demonstration of how we can occupy those white spaces. So the creation of this platform, which we call New IQ, is because it's new, innovative and intelligent. And we've really created 4 products which represent the opportunity. So that's really what today is about. So yeah.
Mahindra has been very discreet with design.
Yeah.
And that's been one of the hallmarks of your customers as well, that wherever you ask, of course, performance is there, but the design aspect is something, and that's visible on such cars as well. Yeah. Specifically, what are the white spaces being addressed? How quickly do you expect that you will be able to address a new customer, which might not be at Mahindra right now, but with 4 different aspects? You also have a sub 4 meter with the next, another couple of launches which are above 4 meters. How quickly do you expect to tap into that, and will we see the Vision S first to come out and launch in 2027, as you mentioned?
Yeah, so 2027 is the year we start. We're not saying which of these will come out first, but all of them are at various stages of evolution and development. The subcompact is a large segment, and we do have a presence there with 3 products at the moment. But we believe that it's not just size, it's the presence on the road which matters. Often we get caught into what's the wheelbase and what sense is it 4 meter or less. But to your original point, when you see a Mahindra on the road, the word we use for it is should have unmissable presence. So when you're seeing the vehicle, it has to be something very distinctive, head turning, and with the presence. And that's what we've tried to demonstrate through these 4 concepts, that you can have vehicles of that kind even as you go into 4 to 4.3 meters. So we are very excited about how these can disrupt and hence really create new white spaces or occupy the white spaces that are there.
And in terms of capacity, how are you going to fulfill this? Because you have roughly about 56,000 for your current ICE portfolio. You have around 4,000 to 5,000 for EVs. So specifically, what's the roadmap of capacity? I think we previously highlighted to go around 72,000 by the next year. So does that already include this EV pipeline?
Yeah, so the plan right now is the phase 1 of this platform will get made in Chakan, which is our mainstream plant at the moment. We are creating space for 240,000 production of the platform in Chakan by moving some of our current commercial vehicles out to another of our existing locations. So we will be able to do the first phase of 240,000 vehicles per annum in that plant. As we go beyond that, and we've spoken about earlier, beyond 2028, 29, we will look at a greenfield facility to enable further expansion.
And specifically, you already have two fantastic EVs on the road right now. With these concepts, will there be a very rational, explanation of which model comes up first, especially within ICE or EV, with that specific to how the model is and which market is it addressing it?
All of these are, flat floor, and we can do ICE and EV on it. So it's a fully fungible platform. The priority right now will be to get the ICE versions out first, and then follow up on EV, because we have an EV portfolio already on the INGLO platform. So we'll first leverage that. You get ICE out on this first, and then follow that up the PBs.
And you already have the XC90, the BE6 on the road. Yeah. I think you're having 2 more on the same platform, which will be launching in 2026. So should expect an India launch first of those, and then all those 4 will be available in the export market as well.
Yeah, all or some of them.
Some of them. And with this concept, you mentioned about global, and that was the competition as well. What could be the strategy for you? Because you already have with the 3XO being very successful in South Africa, in Australia as well, something that was spoken about. How would you address these 4 products in that market, and especially with what are the other new markets that you're looking to target?
Yeah, so our approach really is going to be around this, Puneet. Firstly, markets where we have a brand presence, a good network, service capabilities, what we'll want to leverage first, right? And that's what we're doing with our current product. South Africa, Australia, New Zealand, and some other countries fall in that category. We would want to take our INGLO-based Born Electrics to markets like UK, which is a right-hand drive market, and then Australia and New Zealand, and then over time maybe to New Zealand as well. We are also working on a lifestyle pickup, and that will be left-hand drive, right-hand drive, and for go-to markets like Asia. Our approach will be to build network and brand together in a country and then get pipeline of products in. So it's not like we're looking at opening multiple markets in the world at the same time. We first leverage, build our strength, and then move slowly market by market. So it's a kind of longer term vision on how to go global.
In terms of with these 4 products, I think the launch pipeline for the next 2 years seems to be very set in terms of addressing those white spaces they have. With the customer base that you spoke about, that you have addressed those customer bases as well. Your briefing plan also coming in will add some capacity, Philip, to yourself as well. My question largely is, within the consumers, recently some kind of slowdown in this year. Do you expect that next year with the market should come back, or because you have been able to have growth in the mid-teens while the industry growth is 1 to 2%. So you have been taking share from the others. How do you expect all these concepts to come together firstly with the market expansion as well? Do you expect that we should, with the product that you're surpassing, you should be able to still continue that, or do you expect the market to come back in the next? I know it's very early.
Yeah, firstly, market growth is always very hard to predict, but we are very optimistic on the auto growth story in India. And one of the reasons for that is the fact that there's a huge road network expansion that's going on. We believe the road network expansion is what has made many global markets very big for automotive. People who don't think of traveling from a place A to a place B by car, suddenly by vehicle start driving. And that's what our brand is about, which is the spirit of exploration. So we believe we will be the best place to ride that wave. And we, in the medium to long term are very optimistic on the growth market. The urban market is stressed at the moment. The rural market is better. But overall, we are hoping festival onward things will start looking up.
Thanks so much for joining. It's a pleasure to be with you. Across a bunch of topics, we wish you the best and many congratulations. Thank you so much. Hi, love you for joining us. Bye.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories. This promises to be India's answer to reducing dependence on imported lithium-ion cells. These are batteries that power electric vehicles. It's bold, it's ambitious, and it has its fair share of naysayers who question whether Ola can pull it off. In fact, we have the man himself. Bhavesh, thank you so much for joining
Tamanna,
us.
thank you so much for coming here. It's not that far from Bangalore.
Only 4 hours. But you know, this is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely, yeah.
And of course, a lot of questions on what this plans to do.
हर नई चीज़ पे सवाल होने भी चाहिए. Market के जो सवाल हैं, they're all the right questions. Is this the right use of capital? Is this the right thing for India? But I'm going to start with positioning this in the macro context in which we find ourselves, Tamanna. Tariffs, rare earths नहीं मिलेंगे हमें. यहाँ से oil मत खरीदो, वहाँ से मत खरीदो. We have to build ourselves. Our Prime Minister today has painted a technology vision for Viksit Bharat 2047. And at the heart of India's future is going to be the next energy technology. And what we are building here is the next energy platform of the future. It's not just for making the EV transition, it is for making the whole energy transition. These cells, इतनी बड़ी factory में छोटे से cell निकलते हैं. But you know, you can imagine then you need such a big process to really make those really high-tech cells. All the technology is built by us in-house, and we'll go through and I'll show you, we'll wear the suits, I'll show you how the process is so automated, so quality controlled, dust-proof rooms. And these cells go into EVs, they go into drones, they go into robots, they go into grid energy storage, जो solar के साथ लगती हैं. So this is the energy platform of the future, and India needs to have its own. And we are here today standing at India's first gigafactory.
Fantastic. Let's go inside and take a look.
So you can see here, this is the full-scale model of this whole site. And this vision that you see here is going to be 100 gigawatt hour. Just to contextualize that, today the world produces about 1,500 gigawatt hour. Almost 80-90% of that is in China. So this site alone eventually will be 100 gigawatt hour.
What are we starting with right now?
So what we are starting with is this first block you see here. So
no, in terms of 100 gigawatt hour, we're starting with 5.
What you see today is 5, and the same building will scale up to 20. And then the 20 will scale up to 100.
Okay.
Yeah.
Okay. So how long has it taken to build the entire facility?
The facility took about a year, and then we put all the machines in. So for the last 1 year or 1.5 years, we've actually been fine-tuning our process. And the process goes through a lot of steps, and it's highly complex each step. And छोटा cell बनाने के लिए इतने सारे step लगते हैं.
Yeah, of course. Of course. You know, the question is that why has India not been able to? And you started very well because you talked about the importance of this in terms of tariffs, in terms of Atmanirbharta. The question is, why have we not been able to do it hence thus far? What really is the problem?
See, for India to make a big leap into this, we made a big leap into renewable generation.
Yes.
With solar, with wind, etc.
Yes.
The next phase of renewable is equally, if not more important, which is storage. And storage is more technology intensive, R&D intensive. And in general in India, we've taken the leap on manufacturing, but we're still early in the leap on R&D.
Agreed.
So that's why what you see here, a lot of it is, and you can see here the lines are producing, the cells are coming out. Right, so these are the finished cells, and when I'll take you inside, so we'll see actually किस तरह से वो material से cell बनता है इस पूरे line में. So it's very R&D intensive. All the technology we had to create in-house. So it took us also 4 or 5 years.
You know, this is interesting you say that because this is being seen as a good thing and as a bad thing. The negative in it I'll talk about first is the question that is coming that since you're not doing this with any large partner that is established globally, will you be able to manage the efficiencies that others do have in this space?
Well, we've been at it for 5 years now. When Ola Electric started 5 years ago, we started with our cell R&D. So we've also improved our processes, improved our engineering to a level where our efficiencies are at the same level on global benchmarks. Our scale is lower than global benchmarks, but our technology and our process efficiencies are at the same level. So as our scale improves, our cost of manufacturing will also be equal to global benchmarks. And also for us, this is not a 1 year, 2 year vision. it's a long-term vision. As we keep increasing scale, India is going to be a large consumer of these cells.
Yeah.
We ourselves, as the leading EV company, but also across EV energy storage, बहुत cell लगने वाले हैं. So we will need the whole capacity, and that will provide us the impetus for scale.
Here's where all the magic happens, and of course there are various segments of it. So, you know, the idea of a modern day factory is few people and a lot of machines. And I think one interesting thing over here is that it's led to a large part by women running the shop floor.
Almost 99% it's women. So I would say it's all women factory. Even our automotive factory is an all-women factory.
That was a conscious decision?
Yes, very conscious decision, because in India, one of the reasons our workforce has lagged behind is because women participation is low. And it's not because the women can't do it. It's because there's a little bit of mindset in the industrial communities that are women good enough for the industrial work? And our factory has been, automotive factory has been working so smoothly for 4 years now. So we've scaled that up into the gigafactory, and you know, the women are doing such good technical work. And if I can say this on camera, Tamanna, women are better than men at this work.
You can say it on camera, off camera. I think it's true.
They're more disciplined. They don't take random breaks, and they're more dexterous with their hands. The women are better hires than men.
Oh.
I hope I don't get into trouble for this.
No, I don't think you will. Okay, so now of course we have to wear protective gear, right? When we're getting in.
You know, because I'll tell you why we have to wear protective gear. This process of making the cell is extremely sensitive to moisture, to dust, and to any environmental impurities. So we have to cover our skins because our skins release moisture.
Okay.
So sweat. Right, so we have to cover ourselves in these suits so that the ambient temperature inside remains at a very controlled level. Cell manufacturing is second only to semiconductor in terms of complexity. Semiconductor, you will see similar suits and similar clean rooms. So just like that for cell manufacturing.
Okay, let's go. Okay, so tell me what we are looking at right now, Bhavesh. What is this section that we are going to?
So the whole gigafactory, the cell manufacturing process is extremely clean. Humidity control, dust control, other impurity controls, very high degree because the cell is at a micron level.
Which is why we've had to wear all of this gear.
Sar ke upar, pair ke upar, sab jagah we have to wear all this because we can't let moisture from our skin go into it. Now we are entering into the assembly process.
Okay.
Yeah, so we'll enter into this cleaning room.
Oh.
Yeah.
And we have to wait here?
We'll have to wait here. Wind will blow. So this is for whatever, if we have some impurities, they'll go onto the sticky carpet.
Wow. This is quite an experience. Okay,
so this is what we call this is where the magic happens. This is the assembly process.
Okay.
So there is another much more, a very more tightly controlled process behind this, which is called the electrode process, where we get the powder from outside, put it into a mixer, and out comes a roll, which roll we see over there. So let me show it to you.
Okay.
Yeah, so what this process gets as an input is these rolls. So this is the anode, and this is the cathode.
Okay.
Right, so
is this safe to touch?
Yeah, you can. That's why you have the gloves on. Yeah.
Okay.
Yeah. So ये anode खराब हो जाएगा. We'll. No, it's okay. Don't worry. Minor thing. But so these are heavy. So these are wound very tightly. This thing you see is the material.
Yeah.
Anode, cathode, which goes into these big machines over here, fully automated.
Right.
And you can see we put the anode roll, put the cathode roll, and then it winds. It's called a winder. It winds it into this jelly roll.
Okay.
So it's called a jelly because it's supposed to be soft like a jelly, but it's not because you have to wind it very tight.
Obviously.
But it looks like a jelly.
So this is this actually my thumbprint actually went in.
Yeah.
Because it is.
Yeah.
It's not that kind.
So what will happen downstream is all these things will get actually compressed, firmed up. So you'll press it like this to firm it up.
Okay.
Yeah.
So this is the entire gigafactory. You want to understand what comes out of it? It is this size.
It's this size, which is the cell. This is still not the cell. It'll go into a container, which will then have electrolyte inside it.
Okay.
Yeah. So this is the output of this step.
Okay.
So you take this inside, two of these, and you output this.
Okay.
Yeah.
Got it. So Bhavesh, let's talk a bit about why this gigafactory is such a big deal and why there is in terms of your financial goals, because your Q1 was blockfbuster, right?
Yes.
Huge increase in gross margins.
Yes.
Your view
and bills of materials came down, etc. The vertical integration is what the street seems to be very excited about. How does getting this gigafactory up and about actually play into that, and when do we see the magic of your own batteries in your thrillers?
So the heart of a vehicle is the cell, EV especially is the cell. Just like in the ICE era, the heart of the vehicle was the engine.
Yeah.
And the biggest cost driver, the biggest performance driver, everything is the cell. So if I hold that and show you, so about 40 such cells this size go into our scooter.
Okay.
Yeah, so you can imagine the amount of material that goes in. So the biggest anchor of our vertical integration strategy is the cell. Already, like you said, our Q1 results had a lot of gross margin improvement with a lot other vertical integration. For example, the motor, the electronics, the software. And now the cell is the next phase of that vertical integration. When our cell comes in, that gross margin will further go up. So, and that cell coming in starts this quarter. So one of the reasons I wanted you to come here and for you to see is that the cell is ready. And the cell is going into our products. And I want you to see this. So you see, it's fairly complex process, fully automated. The girls are only monitoring the screens.
Yeah, this is amazing. This is amazing because practically it goes through.
So by the time it comes here, it already flattens this surface.
Yeah.
And that machine is separating the cells into different grades. Top grade, one level lower. So the one level lower will get redone. And if I show you what the girl does, so there's no manual intervention. The girl operates the computer.
Okay.
So it's a very high quality manufacturing job that gets created in a factory like this. So all these kind of, she's monitoring the system. If there is any alert, she will deal with it on the system itself.
Okay.
Yeah.
So coming back to this, the gigafactory, this is of course, the exciting thing about it is this is part of the PLI scheme.
Yes.
And in second quarter, the PLI scheme incentives are also expected to kick in, and that also helps you, of course, in terms of EBITDA, etc. The one concern was that have you stuck to the timeline to be eligible for those PLI incentives?
Yeah. No, that's a fair question. We have also decided that we will not expand beyond 5 gigawatt hour right now.
Okay.
For the PLI, we had to grow till 20.
Okay.
So, but we're the only one in that scheme who has put up a factory and is producing commercial cells.
Yeah.
So we are engaging with the government and telling them that we might need a little bit extra time.
Okay.
And the government is fairly empathetic because of the complexity that goes with this kind of a manufacturing setup. The fact that it's the first in India appreciates our point of view on this. Yeah.
Okay, so to be fair, the gross margin expansion has happened without the PLI incentive coming
absolutely.
in. Without the possibility of the PLI incentive being delayed, do you still become EBITDA positive on your auto segment?
Q2, that's what I've told the street in Q1 results.
Yeah.
And we are on that path.
Yeah?
Yes.
Okay. What is demand looking like? I know it's in a gigafactory, but you sell bikes, so have this vantage point of seeing what demand is looking like.
Yes.
And there's an unclear story there. One side of the speech, some companies say consumption is picking up, others they're not.
Yeah.
What is that looking like for you?
See, I think the EV story, penetration story, where it is still very early. So there's a lot of headroom to grow the EV penetration story.
Yeah.
We have a scooter portfolio where we have a very strong position. Like I was mentioning, we have sold almost 1 million scooters. The next player has only sold less than 6 lakh vehicles. So we have a very large scooter franchise in EVs.
Yeah.
Scooter penetration is now almost 20% in EVs. The next phase is motorbikes, and our motorbike story is picking up. We are being gradual. We started from South India, launched about 200 stores with our bikes. This month and next month we will scale it up to all our stores. So the Roadster X and X Plus consumers have given us 2 thumbs up. So it's looking very exciting, and you will start seeing very good numbers as we ladder up into festive.
Okay, so the festive push, apart from the great numbers coming in, what do you think your market share is going to look like? Because your market, Mark, you were up here.
Yes.
You were the guys who dominated the market.
Yes.
So 50% plus.
Yes.
Then all the big boys woke up and EV to humko bhi
So
then they've come in and your market share now has improved back at
now it's rising again. 20% is where it is right now.
Where do you see it going?
See, you mentioned the trajectory well. We were about 35 to 40%, before our IPO 1 year ago.
Yeah.
And since then, other incumbents have come in with more scale and more products, and our market share has gone down to the high teens, and now it's inching back up. What I see is, what work we did over the last 2 years, other OEMs are doing now, which is build some products, scale up distribution, get some consumer mindshare. But we've gone to the next game already. The next game is actually to make money with EVs. To make money, you need the vertical integration, you need the technology development, you need the product portfolio. So Ola Electric's core strategic pillars, which are three: vertical integration in manufacturing, our own technology development across the stack, be it cell, software, electronics, and company-controlled front-end distribution. These three are helping us grow both profitably and inch back market share. So now, as you see over the next few months, and especially as ladder into festive, we aim to claw back market share. And we also aim to have a steady state market share of about 25 to 30% in the two-wheeler EV segment.
Do you think that the company has crossed that hump, those concerns from customer service perspective? That was something which was a pain point a few months ago. Do you think that that has receded? And especially, I think, with the newer models that seems to have receded.
Absolutely, Tamanna. Well, we had a challenge last year where our service network was not as big. Our sales network had grown, but our service network we hadn't scaled up fast. Yeah. So then we spent time investing into scaling up our service network. And now our service network is almost where we wanted. There's still another quarter or so of effort required. Customer service complaints and all are now fully taken care of. It's roughly where the industry average is. Now with our new products also, the Gen 3 products, the warranty claims, customer complaints are much lower because it's a much better product, more in-house manufacturing, the motor controller, everything manufactured in-house. So as a result, we have a much better product. And the customer adoption of the Gen 3 product is very strong. So we have both our Gen 2, Gen 3 products in the market. Gen 3 now contributes to almost 90+% of our sales.
The last time I spoke to you was before your IPO.
Yes.
And the Bhavesh pre-IPO and the Bhavesh after Q1 of FY20, the very different person.
Is it?
From my perspective, I speak to a lot of CEOs. So from my perspective, I can see that you have tried to figure out what the street wants, what investors are saying.
Yeah, no, that's...
Has it been a bit of a journey? Because you've been a passionate creator.
Yeah.
You started this journey as a creator. I have an idea and I want to create.
Yes.
Now you have to manage a lot of stakeholders.
No, you're very right, Tamanna. It's been an important learning journey in my journey as an entrepreneur. Specifically, two things that we have learned as an organization and me personally. How we need to do smarter capital allocation and how we need to do operational risk management. Especially as a public company, the yardstick is higher, and rightly so. There are more people who are invested in your journey. The way we have to manage operational risk also is broader and more deeper. So we're learning those skills, and we're learning them by adding people who have been through this journey before. We're learning them by ourselves, reflecting on some of the learnings. And I do believe today the company is in a much better trajectory of a balanced, profitable growth journey than where we were maybe 1.5 years ago.
What happens in terms of, does this realization and these new responsibilities as someone running a public listed company now temper some of those ideas, the maverick part of you?
Not at all. Not at all. I think it adds a layer. It doesn't temper anything, but now it's a more holistic way of managing business, or my approach to entrepreneurship is more holistic. The ambition, सपना तो वही है, but सपने को पूरे करने के लिए जिस तरीके से आगे बढ़ना है वो थोड़ा सा nuance हो गया.
Let's see the battery. I want to see.
Yes, the battery is all the way down that side. So shall we walk back?
Yeah. Okay.
Yeah.
Let's walk back.
So this whole line, like I said, starts from that electrode roll. We make the jelly roll, and there are almost 25-30 processes that happen in this line, fully automated.
Okay.
And each step is manned by a girl. Actually, I shouldn't call it manned, woman by a girl.
Yeah.
Yeah, and that's another important story, Tamanna. The amount of change of life that a girl has when you give her employment in a place like this, a rural community.
Yeah.
Right? The whole family's life changes.
Correct.
And we've seen that goodwill be there for us as we've given all these girls a very respectable job.
No, and employment in manufacturing is huge. I want to come back to something that you said right when we started this interview, when you talked about the world we're living in.
Yes.
Tariffs. Someone says, don't buy oil from here, don't buy oil from there. A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what we're trying to do to solve that problem.
Yes.
And right now, of course, only for Ola, but does this become something that, you know,
we can do broader.
Forward.
Yeah.
So tell us a bit about that.
Yeah. So I think the geo-strategic landscape, Tamanna, is increasingly getting more complicated. And I think there's broad consensus that the geostrategic landscape is only going to get more and more complicated over the next few years. As countries now start looking out for themselves, globalization is going through a different phase now. So, and this is also coming at a place where in India's journey, we are looking towards a Viksit Bharat dream, like the Prime Minister has said, where we have to develop ourselves. Now, how do we choose to develop ourselves? It's a very conscious choice we have to make, that we have to invest in technologies of the future so that we can control the narratives of the future, the products of the future, supply chains of the future. Cell and this energy is one of them. Rare earths is another one, and we can see how our neighbors are really using it as leverage against us in a trade negotiation or whatever. The way forward for us is twofold, Tamanna. We have to partner with other countries. It's not as if only one country has the source. We have to partner with other countries, like-minded countries in Southeast Asia, elsewhere, western part of the world. And there are also, we have to leapfrog technologies. So now motors, electric motors today use rare earths. But the whole world has moved to rare earth free motors now, increasingly.
Okay.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. Our entire two-wheeler lineup will, by next quarter, be rare earth free. So
does it work the same way? Sorry,
absolutely the same way.
Because if there is an alternative, then why is everyone getting blackmailed by one country that has all this?
Because it needs some technology development. It's a next generation technology. It's like 3G था, फिर 4G आया, फिर 5G आया. उस sequence में चलती है ना गाड़ी. So rare earth है, then can you get the same performance from a non-rare earth magnet? Then from without a magnet itself, electromagnet के साथ. You know, we've all studied physics in school. Electromagnets are magnets with electricity, just a copper wire with electricity. So increasingly motors can be without any magnet. It can be electromagnets only. So that's a direction of technology. It needs some level of technology development. We have done that because we've invested in technology over the last few years. Indian companies, other companies are behind on that curve, but other global companies are doing that. Many global EVs are actually without rare earth motors now, increasingly. Right? So our products will start coming in without rare earth magnets next quarter. And we do hope the rest of the Indian industry catches up. So that's one way we can kind of de-risk ourselves from the supply chain issue.
Now, if what we're creating here clearly is important for the industry as a whole, not only for Ola, of course it has to do vertical integration, margins, etc. Is there a potential to have this available to the rest of the industry? Is there the ability to scale up to that extent required?
Yeah. So this is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah. It's इतनी बड़ी फैक्ट्री में इतनी छोटी सी चीज़ निकलती है.
That's what it is.
As you can imagine, you know, the most complex factories in the world are for the smallest things.
Yeah.
Like the chip and the cell. You know, such a big process. ये सूट वूट पहन के बनाना पड़ता है. But in the end, it looks so simple. But a lot of complex technology goes in it. And you can see here, if I draw the attention of your crew, this line, you can see the cells are waiting there for this process. They're coming in over the line there. The machine picks them up, puts them in the process, and then.
What is the rate? How many batteries do you have per minute, or what is the sort of rate of production of these?
So this factory can produce 5 gigawatt hour of cells, and I don't know how many cells that means. I've never made that math. Yeah, but a vehicle takes 40 of these cells, so 10 of these cells make 1 kilowatt hour. So 1 gigawatt hour is a million kilowatt hours. That's 10 million, so 50 million a year.
Oh, wow.
Yeah, so that's about 1 lakh or 2 lakhs a day.
Wow.
That's what this factory will totally produce.
Very impressed with the mental math.
I am a engineering student, so
correct.
I hope those numbers are right, by the way.
We'll check them. Okay, so now we're getting a great idea of the scale of this.
Yeah.
Now, my question is, what do you need to scale this up?
Yes.
There is a PLI scheme, but clearly more push will be required to bring this to fruition and to the scale that India needs.
Absolutely. Our scale right now is 5 gigawatt hour. We do aim to scale to 20 gigawatt hour as the Indian market grows. Today, the Indian market cannot digest a 20 gigawatt hour scale yet, but the Indian market is growing. So in the next few years, as we end the decade, I think we will have the potential to invest into the 20 gigawatt hour. And then beyond that, the market potential is huge. So just for automotive and energy storage, I believe India will need about a few hundred gigawatt hour a year capacity in a decade or so. Right, so it's a potential for many companies to enter and create a few large gigafactories across the country. Then beyond that, the world is also looking for de-risking its supply chains from China. And China is the largest supplier of these cells today, lithium cells. India can be a very good trusted supply chain source for the rest of the world, be it Southeast Asia, be it Australia, be it the West or Middle East. Because you will not be able to build these factories in every country. They require a lot of depth, ecosystem technology. And I think that's where India can become an alternate peer to China in terms of scale and technology.
Yeah. So this is it, folks. This mega Zeta factory, you've seen the first logo curriculum right here on NDTV, and this is what comes out of it at the end of it. It may feel small, but it's definitely mighty. It is something that is hopefully
Cheers to that.
Power the future. Cheers to that. Thank you.
Thank you, Tamanna.
Thank you.
Wonderful.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. It's been an eventful long weekend for everybody here in India because there's so much that's happening across the world that relates to us here in India. Of course, on the global front, you have the meeting between Donald Trump and the Russian President Putin, and that has a bearing on trade between the US and India. There's also the announcement, and this is what is most important, the announcement of a proposal for GST rationalization. And this essentially means that there will be quite a few categories of products and services that will get cheaper if this gets passed by the GST Council. This is being looked at as a booster shot for the Indian equity markets and the economy as a whole. And there's also the bonus of the upgrade of India's credit rating that took place at the end of last week. But let's talk about how fund managers are viewing this. And incidentally, my guest today is Shreyash Devarkar, who's the head of equity at Axis AMC. Shreyash, thank you so much for taking the time. I asked you to join me before knowing everything that would happen. So it's a happy coincidence that has taken place. So first, everything that has happened over the weekend, particularly what is domestic focused, how do you read that? Is this the shot in the arm that the Indian economy and equity markets were looking for?
So definitely, when you look at it holistically, from whatever governments have done over a period of time, including this one. So it is about tax rate, it is about certain policies in state specific which were undertaken, and now this. And even you know that moving ahead in a year or so, there will be 8-pay commission talk. So holistically, combined together, yes, definitely, this is a good development on the consumption front.
Okay, let's delve a little deeper into this, because this is one of several measures that have been taken over the course of the last 12 to 18 months that was expected to bolster consumption. The first, of course, was that cut in income tax rate and the slabs rationalization that took place, and we were anticipating that over the course of this financial year you would see a bolstering of domestic consumption. I guess we're yet to see evidence of that. Would you agree, Shreyash? And there's also monetary policy activity, the fact that interest rates have been cut. All of those factors coming together, we're yet to see some movement on the ground. Would you agree?
Yes, as far as when we observe company results, then definitely one need to look into it, and we have not observed any change in commentary from companies per se. However, one should look at how much is the amount, right? So in the current GST cut, and various experts based on the analogies they've used, the amount of stimulus is expected to be somewhere around 1 to 1.5 lakh. Again, this is just a conjecture as of today, without knowing any details. And if you add earlier one of tax rate cut, which is broadly similar in that sense. So that's why I started with that. It's a cumulative impact one need to see. If you try to see only individual impact of individual steps, then it may not have a impactful evidence. While if you then have a cumulative impact, which will come over a period of time, then definitely it may have a good development. If you go even historically, there has been rate cuts, etc., especially on the GST side. So you don't get direct evidence of, yes, this rate cut has led to so much demand increase. This is always a cumulative impact of monsoon, overall earning, tax, etc., etc. So let's not look at it in an individual development and its impact.
Yeah, that's a good point that you raised. So therefore, let me ask you about the construction of the portfolios that you manage. And of course, you're very closely involved in the overarching equity strategy of Axis Mutual Fund as well. So you're obviously looking further down the line. What are your own expectations that you've built in as you've set your portfolio strategy as things stand right now?
So as far as portfolios are concerned, broadly, the way we are looking at market is there are segments of market where there is established growth and the growth is getting delivered. Those established segments are across the board. They are in B2C segment. So if you take travel tourism, you take airline industry, there is a hotel. In B2C space, even retail industry is doing well, a part of it. In that space, high-end SUVs or high-end car, that segment is doing well. Till some time back, even real estate was doing exceptionally well. Today, the numbers are not that great, but yes, that continues to chug along as of now. So there are good sizable pockets in B2C space which are doing well. At the same time, obviously, there are pockets like FMCG, they are not doing well. Now here what market has done is the spaces which are doing very well, they have got re-rated a lot. They have got re-rated to the extent of almost 30-40% to 200-300%. While the spaces which are not growing, now if you take on the B2C side itself, now credit growth, which generally is driven by retail credit growth, that has slowed down. You have FMCG industries growth that is lower. So if you look at, then there is a consumer durable also in some pockets, especially highly penetrated product pockets, there is no relatively less growth. Now this pack is reasonably priced. When I use the word reasonably priced versus re-rated, I'm comparing the valuation compared to the pre-COVID, because after that there has been aberration in data points. So if you compare the valuation compared to the pre-COVID level, then the spaces where the growth is low, which I highlighted later, those segments are reasonably priced compared to the pre-COVID, while the segments where there is a high growth, they are actually re-rated a lot. On the B2B side also, you will observe the same thing. On the B2B side, the high growth segment are electronic manufacturing services, power capex, power sector capex, defense. So you see, these are the pockets where B2B, on the B2B side, companies have done exceptionally well. And in that context, there also you have seen the multiple re-rating a lot over a period of time. While on the other hand, you take oil and gas, then there is not much re-rating because the growth has not been very high as such. Metal mining, these are the typical areas where the growth has not been high. So the way we are looking at the portfolio is bifurcated in two parts. One is, you cannot just say that I don't want to take a valuation risk, and though there is a growth. So the portfolio comprises of growth sectors which are having high valuation risk, as well as the sectors which are not growing so well, but the valuations are reasonable. There we are choosing the segments where we think that there may be turnaround in near term because of the macros what we are highlighting. So among all the factors which we highlighted earlier, there is, in addition to that, tax rate cut plus GST. Then in addition to that, there is a monetary policy loosening that also is going to have impact. So the cumulative impact of all these things and the plays around that, whichever are available in the market and reasonably priced. So that is one part of portfolio. So portfolio, as I said, comprises of both these, I would sort of say, extremes per se.
Understood. I do want to talk about when you maybe tweaked things, because if I look at a 3-year period or even a 5-year period, Shreyash, before COVID, in the run-up to COVID, a couple of your schemes were doing incredibly well. Post-COVID-19, it went through a bit of a lull, and then back over the course of the last 6 months to a year, they're once again ranking higher. So I'm wondering, what has gone into the tweaking of strategy that has helped you do this, if you can take us through that?
At Axis, actually, broadly, when it comes to philosophical investment, our philosophy of quality and growth, that has not changed. It continues. The only change what you would have observed in our portfolio, and that is more to do with the economic development rather than anything change at our end, which is more number of stocks, more number of sectors, which never used to be earlier. So earlier the portfolios used to be very compact, maybe some portfolios in 20, 30, 40 stocks kind of portfolios. While at that time the economy was narrow when it comes to the listed space especially. Now, if you look at, as I highlighted, the pockets of growth, they are both on the B2C and B2B side. And then there are segments where there is a possibility of turnaround because of the overall macroeconomic development. So the net outcome of that and the net outcome of economic structure the way today it is the portfolios are more diversified as such. That is one, if you want to highlight what is a change, then this is a change, and this change is more because of economic developments rather than anything we are thinking differently out here. Secondly, again, there is an improvement, as you are highlighted over the last year or so, is again the market. On the other hand, if you notice, that market has started consolidating in a manner. If you look at the success rate has drastically reduced. So in that sense, whenever such thing happen, generally the companies which are having better ROEs, better free cash flow, and are having superior growth, they tend to outperform the broader market, because here the valuation re-rating is done now in this market. So you cannot expect valuation re-rating. Even when I said there are segments which are reasonably priced, they are reasonably priced, they are not cheap at all. And in this context, valuation re-rating is very difficult. So when you stick to quality and growth, then that also has started playing out in the market over the last 1 year.
You have these themes that move out of favor and then move back into favor. As you've pointed out, quality seems to be moving back. Now, help me understand one of the questions that I often try to ask fund managers, and I know that you're head of equity, but of course you would weigh in the hybrid strategies also to a certain extent. And the way that you're positioning yourself in your hybrid strategy, particularly the dynamic asset allocation fund or the balanced advantage fund, would indicate to your investor how you're viewing the current scenario. So how is that currently equity versus fixed income, and where is it likely to move in the medium term?
So in this space, if you just see even historically over the last 1.5 years, let's not take back into long-term history, we have moved a lot, right from 70% odd to 50%, then 55%. And definitely we are now lower than those 70%. So we are actually in that 50, 55, 60. So that thing moves based on the developments in the market. Our view in this space has been that the way I highlighted in our other funds as well, that there are spaces which are very expensive, but they are growing. And there are spaces where there is a lack of reasonable growth, but they are reasonably priced. And in this context, as you are observing that already, as it is reflected in 1 year returns of large cap, mid cap, small cap, the returns are suboptimal in all the categories. And the net outcome is because of this. I'm not saying that there is no growth, but where there is a growth, the valuations are not really in your favor. In some cases, you are observing that despite if a company, instead of growing at 20%, they grow at 15% and the stock falls. Now, because the expectations are very high when the stocks are trading at 70, 80p, and 15% is not a bad growth at all. And considering this, we have adjusted our hybrid portfolios to the lower exposure to equity over last 1 year or so. It's not very low. As I said, the bottom-up stock picking will play a major role here, and in my opinion, more so in case of hybrid funds, rather than taking a call on whether the exposure is say 60% or 55%, that would not make much difference. In that 55%, what you are owning and what you are not owning, that is going to play a major role, and our focus is especially on that.
Yeah, you said it, and margin of safety, I think, is what people look for, right, Shreya? So therefore, in the broader market funds, and I know that the mid-cap fund is something that you've been looking at for so many years now, would you say that relatively speaking, the broader market funds, there's less margin of safety given everything that we've seen? For Nifty 50 earnings, I think a lot of people will agree they're more or less in line or even better than some had expected. But are you seeing that in the broader end as well?
And that's where one more observation starts, because you highlighted they are in line with expectations. What is happening is over last 1 year, actually the expectations have already come down. Market have cut a lot the expectation for FY26. Probably some of the strategic expectation is running in high single digit. And on those lowered expectation, you are not seeing further disappointment. That is a good part for FY26 as such.
We're running out of time, but very quick last comment, Shreyash. usually ask fund managers to send out a message to their investors. What is your message when you talk about return expectations and how to benchmark them?
That is the easier one. Actually, always the answer to this question has been that expectation from equity market should be closer to nominal GDP growth. So historically, it's based on historical evidence. Historically, whenever nominal GDP growth, whatever it has been, the equity market large cap would have given 1-2% plus minus return, and mid cap additional 1-2% plus minus returns. So this has been the range over a longer period of time, and one should go with that kind of expectation, especially when the market is already discovered and most of the growth segments are highly priced.
Fantastic. Suresh, always a pleasure speaking with you. Thanks so much for taking the time.
Thank you very much.
All right, now mutual fund managers in the equity space in particular tend to have good times and bad times like anybody else does. But this is because they have an overarching framework that determines the construction of their portfolio. So, for example, there could be one fund manager that is orientated towards value style. Take a Parag Parikh, for example, or somebody that goes or gravitates towards a growth or a quality style, or somebody who prefers a growth at a reasonable price style. Usually, you will find that these themes tend to move in cycles. There will be periods where value comes to the fore, and at other times, growth and quality takes the front seat. We're going to talk about schemes and asset management companies that went through a bit of a rough period and that have come back to the fore, and those that were riding high in the previous year that are not necessarily doing particularly well right now, and what it means for your strategy. Joining me is Santosh Joseph, the founder of Germinate Investor Services. Thank you so much, Santosh, for taking the time. Let me ask you first about what you make of this change of guard, so to speak. How often in your experience does it happen?
Alex, I'm glad you brought that up because we do not like to believe that winners rotate. We do not like to believe that even someone that's not performing today, depending on what you choose, could also be good performers. In fact, the change of guard is essentially maybe the portfolio stance that the portfolio manager believed in, or the fund house largely believed in, actually coming into play. Now, if you just notice the trend, you will always notice that some, either the mutual fund companies or the schemes will be doing very well, roaring compared to the market, and then they suddenly go into a kind of a hibernation mode. And those that were hibernating come back. So there is a clear case to portray that winners rotate, and even the losers also rotate to come back as winners, choosing fundamentally good schemes which have a track record and which also have the propensity to bounce back becomes extremely critical and important while you're selecting, especially navigating these kind of up and down market circumstances.
Let's talk first about the schemes and the fund managers that were riding high in 2024 that seem to be taking a bit of a backseat in 2025. And of course, it's important to establish that equity market returns are not linear in any form or fashion, and these fund managers can justify that or are testament to that. So talk about some of these schemes, Santosh.
Well, let's begin with, if I was sitting exactly a year ago from now in let's say mid 2024, the funds that were hitting all the charts were the quant fund for all the right reasons of top performance. Maybe JM was doing well, and you had Mahindra, FlexiCap, and the mid cap and small cap, all of them doing well. Now, when somebody wanted to allocate new money and they were going to look at the past performance, it was very compelling to see that these funds were hitting the charts, and then you wanted to put your money in. But today, exactly a year down the line, when you look at them, you do not feel so convinced to park your money over there, and then you look for the new winners in the same shape. Now, similarly, you have some of the guys who did well last year not holding up well this year. So there is this dilemma that an investor goes through. Should I really chase the guys who are showing me immediate good last 1 year performance?
Let's talk about why they're not doing well. And JM, I remember exactly what you were saying. JM FlexiCap, for example, is a scheme that we were talking about quite regularly in 2024 because it was topping the charts. What changed?
So I'll give you an interesting breakup. When we did JM in May and June last year, I remember covering it for various media houses and why JM had such a phenomenal run. And then I'd even spoken to the fund management team, and they explained how they positioned their portfolio to capture the changing dynamics in the Indian market. Number one. Number two, they also had a slightly elevated level of small and mid cap in their flexi cap fund. Well within the parameters of how a flexi cap fund could be managed, should be managed, but they had really exercised their discretion in terms of their exposure to mid and small cap. And we all know in the last 12 months in particular, mid and small caps have been struggling to keep up the pace that they were running up with the previous 2 to 3 years. So suddenly you notice that a fund that was doing very well because of a certain positioning of exposure to a certain segment of the market, especially mid and small cap, slowing down a bit and cooling off, that it just normalized in terms of performance.
You know, there are also on the flip side, and we've just spoken about schemes that did well, but on the flip side, there are schemes that underperformed for a large number of months and years, and they've come back to the fore a little bit in 2025. Axis, incidentally, today I spoke with Shreyas Devarkar, who's the head of equity at Axis, and what he was saying is what he tweaked, or what they tweaked in their formula, is not the overarching framework, but the fact that they now have more stocks in their portfolio. This is something that they decided was necessary because they felt that they were not necessarily capturing the upside in the stocks that they initially had in their portfolio, so they widened the ambit, and that has given them some success. So Axis is one that has done well. Is there any other that stands out to you, and why have these started to do well 2025?
So even talking about Axis, Alex, we all know that Axis had a great run a few years ago and then went through 2-3 years of slump, and now they are back and the returns are visible. They were in a situation where they saw the market was polarized with just a few number of stocks, and that was enough to buy into the portfolio to make the returns. But in the last 2.5 years in particular, the breadth and the character of the market has changed, and therefore if you are not flexible enough to increase the number of stocks, to be a little more diversified in sectors that you otherwise thought were not performing but turned around, and if you didn't participate in them, you started having a dip in performance. So I think Axis has done well to broaden their base in terms of number one sectors, and number two, the stocks. You're right, they increased the stock holding or the stock universe list that they had from maybe 300, 350 odd to close to 500 today, and that has given them the edge. Likewise, I think many other companies that are open to the idea of being open to sectors that they initially thought didn't need to be in their portfolios, to segments of the market want to look at, are the ones that have turned around. Another good example to look at this is your Invesco mutual fund company. Most of their schemes, whether it be mid cap or flexi cap, are now back with a bang. They had good performance in the past. They went through a period of lull, and they're right now back right on the top of the game, simply because they got their whole investment thesis right, and it's working very well for them right now.
And you've mentioned a couple more in the notes that you've sent me. Mirai Asset Flexi Cap and White Oak Flexi Cap have also done well. What's worked for them?
So when you look at both Mirai and White Oak, these are strategies that was not appreciated in the last year or two, where you have a broad-based, diversified bunch of sectors and a diversified bunch of stocks. You also notice another very unique thing in some of these funds is the number of stocks. There is a theory that some fund managers do not go beyond 30, 40, maybe at best 50, 60 stocks. It's particularly in White Oak, you look at, they really have a long list of stocks, which is they're participating across the market, across segments, and across even market caps to ensure the portfolio performance is on the top of the game. So in a flexi cap, you do have that luxury to go across sectors, to go across market caps, and to even have a long list of stocks. And that helps a portfolio manager, especially in a year like in the last 12 months where index itself has been very sluggish. Even many sectors have been sluggish, but the broader market is actually inching forward.
Let's talk about one last category of schemes, which is, I'm tempted to say evergreen, because these are schemes that do particularly well irrespective of where the market is, right? And you have names like Parag Parikh Flexi Cap Fund, you have the Motilal Oswal Flexi Cap Fund, HDFC Flexi Cap Fund. Two of these at least are household names. Why do they work so consistently? And Parag Parikh, for example, one thing is very clear, they don't fall in fact, they fall much less than the market, even if they don't gain when the market is going up. Is that what is working?
So Parag Parikh, in essence, has been an exceptional performer and consistent performer. To begin with, I think they've said it many times in the past that the valuations matter most. Therefore, every time they let a stock enter the portfolio, they're mindful of the valuation that they're entering. And therefore, if you're mindful of the valuation they're entering, you're avoiding mistakes at the time you enter the portfolio, you're straight away setting up for success. Second thing, they're not shy to use cash as a strategic tool into the portfolio. You've seen it in the last 12 months, you've seen it in the past history. They've raised cash whenever they're uncomfortable with the valuations. They're not shy of holding cash, and they believe in taking cash calls, where most portfolio managers says, cash call is not ours, it is by the investor or the advisor advising the client. But here at Parag Parikh, because they take the cash call and because they're mindful of valuation, they tend to be falling lesser than the market. They tend to be a lot more consistent. Likewise, when you look at even a HDFC FlexiCap or a Motilal FlexiCap, they're also very, very opportunistic in terms of spotting opportunities in terms of valuation, and even sometimes raising cash or raising the large liquid names that they hold into the portfolio to protect the downside and also to be consistent over the long term.
Important points. And also, just to round up this conversation, viewers, do not buy into a scheme just because it is ranked in the top lists in that particular year. That's the worst way that you can select schemes. We'll talk about this in more detail in the shows to come, but that brings us to the end of this edition of Your Money Matters. Santosh, thanks so much for taking the time. And viewers, do stay tuned. This is NDTV Profit.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, Indian market started off the day, on a weak high note, but Nifty has reclaimed its 25,000 mark towards the end. The index, however, pared its gains to end around 24,800 levels. The 30-pack Sensex also ended trading nearly 1% higher, closing above the 81,000 mark. S&P Global rating upgrades on India and the proposed GST reforms appear to have prompted the Monday uptick. Big auto players like Maruti and M&M pulled up the benchmarks alongside Bajaj Finance and HDFC and HUL. On the other hand, ITC, Infosys and L&T added pressure. So the broader markets reflected a strong day of trade, ending over 1% higher too. Most sectors ended in the green, with Nifty Auto, Rural and Realty leading the sectoral upswing. Nifty Auto, in fact, posted its best intraday gain of 2025. The auto index ended with gains of over 4%. Now, this was largely boosted by the positive impact of the proposed GST reforms. Somani Ceramics reported modest Q1 of FY26 growth, with consolidated revenue up 4.4% year-on-year to around 604 crore rupees. Now, this was driven by a 3% increase in the tile volumes. So, however, EBITDA has slipped 1.6% to 48.2 crore rupees and margins have contracted to 7.9% from 8.5%. Net profit has fallen 15.6% to 10.4 crore rupees due to margin pressure and softer realizations, especially from the joint ventures. So the company has maintained high utilization in the bath fittings, but sanitary ware has lagged at 56%. So temporary disruption at the Haryana plant, responsible for over 25% of the output, now impacted by the operations. Management also has reaffirmed guidance for high single-digit revenue growth and 100 to 150 basis points of margin expansion for FY26. Vodafone Idea reports narrowing losses in the first quarter. Now, key factors include a higher average revenue per user helped by one additional day in the quarter. Net debt also rises to 1.94 lakh crore rupees from 1.87 lakh crore rupees. Now, the company continues its streak with reported losses for nearly 30 consecutive quarters, accumulating over 2.1 lakh crore rupees in the total losses. So quarter-on-quarter revenue remains flat, while EBITDA dips 1% to 4,612 crore rupees, with margins slightly down to 42%. Net loss also narrows to 6,608 crore rupees from 7,166 crore rupees. ARPU has inched up to 165 rupees and the subscriber base stands at 19.77 crore rupees, which is marginally down from 19.82 crore rupees. Tips Films delivered a stellar Q1 of FY26, posting a record revenue of 95.36 crore rupees, which is up dramatically from 12.38 crore last year to swinging net profit of 4.74 crore rupees after 4 quarters of losses. Now, the strong operational performance and a 7.4% margin is has fueled this turnaround, showcasing robust growth in the entertainment sector as well. Signpost India delivered a strong Q1 of FY26 with revenue soaring 37% to 137 crore rupees and net profit also rising 35.7% to 15.2 crore rupees. Now, this is fueled by robust top-line growth. A 17% cut in the other expenses has boosted the efficiency, though EBITDA margins held steady at 23%, reflecting solid performance in the advertising sector. KC International has secured new orders worth 1,402 crore rupees across various businesses, including transmission and distribution, civil and cables and conductors. Now, this brings their year-to-date order intake to 8,400 crore rupees. The company's order book position stands at 34,409 crore rupees as of June 2025, with tenders under evaluation and in the pipeline worth over 1.8 lakh crore rupees. Fusion Finance has appointed Rajiv Sardana, a former HDFC executive, as an independent director. Now, the company's AUM growth and disbursements have been sluggish. However, collection efficiency has improved and delinquencies, have decreased, leading to better credit cost. Fusion Finance reported a net loss of 92.3 crore rupees in Q1 compared to a loss of 35.6 crore rupees in the same quarter last year. So the company's calculated net interest income stood at 273 crore rupees with a 31.4% of decline. Zaggle's Q1 results turned out strong. Revenue has jumped 31% year-on-year to 332 crore rupees, with EBITDA increasing by 15.6% to 30 crore rupees. The company's margin has also improved, reaching a 9.3% compared to 8.9% last year. So, breaking down the segmental revenue, software fees saw a modest increase to 10 crore rupees from 8 crore rupees. Now, program fees also rose to 145 crore rupees from 126 crore rupees, while Propel platform revenue has surged to 175 crore rupees from 116 crore rupees. Now, the net profit has also seen a significant boost, rising 16% to 25.1 crore rupees. Glenmark Pharma's Q1 numbers fell short of expectations, mainly due to exceptional items related to a lawsuit settlement. Revenue also grew marginally by 0.6% to 3,264 crore rupees, while EBITDA declined 1.3% to 581 crore rupees. The company's India business saw slower growth due to underperformance in the diabetes segment. The US business contracted by 0.4% year-on-year. Net profit also took a significant hit, plummeting 86.2% to 46.8 crore rupees. The margin also compressed to 17.8% from 18.1% in the same quarter last year. Borosil reported a strong Q1 of FY26 with net profit soaring 87.4% to 17.4 crore rupees. This was actually fueled by a tripling of other income and a 62% drop in the finance cost. So revenue rose 5.2% to 233 crore rupees and EBITDA grew 11.7% to 37.3 crore rupees, lifting the margins to 16% despite a 31% tax increase. Morgan Stanley has downgraded Bajaj Auto to a tactical sell with a target price of 9,117 rupees. Now, the brokerage firm believes that Bajaj Auto will benefit the least from the potential GST rate cuts. Now, this is because 40% of Bajaj Auto's sale come from the exports and electric vehicles account for only 6% of its sales. So as a result, the company's weighted average GST rate may not drop significantly. And also, Bajaj Auto's business has low operating leverage, meaning that even if domestic volumes increase, it may not have a substantial impact on the margins. Jefferies has initiated a coverage on HDB Financial Services with a buy rating and a 900 rupees target price, citing its robust lending franchise and strong growth outlook. So the firm expects improved AUM growth from H2, a 30 basis point expansion in the net interest margins, and moderating credit costs to drive earnings and boost return on the equity through FY28. Jacob's Q1 of FY26 saw net profit skyrocket to 104.28 crore rupees from 13.73 crore rupees. Now, this is boosted by a surge in the other income and lower taxes, despite revenue growing 8.3% to 131 crore rupees. However, EBITDA has fallen 43.7% to 7.81 crore rupees, with margins dropping to 5.96% from 11.45%. Now, this is due to higher operating expenses. UBS has also initiated coverage on Angel One with a neutral rating and a target price of 2,935 rupees, citing market cyclicity and regulatory challenges impacting the brokerage income expected to normalize by late FY26 despite a projected dip in the EBITDA margins in FY26. UBS sees Angel One's client acquisition and diversification beyond broking as key to future growth. AGI Infra posted a strong quarter one of FY26 with revenue up 26.1% to 91.6 crore rupees and net profit soaring 38.9%, which is nearly 39% to 20 crore rupees, driven by robust project execution. So EBITDA has risen 41% to 30.3 crore rupees, lifting the margins to 33% from 29.6%. So the board also approved a 1:5 stock split following a 1:2 split in December 2024, pending shareholder approval. Morgan Stanley maintains an overweight rating on Tata Chemicals with a target price of 1127 rupees. The firm highlights that outside of China, the company operates in a balanced market. All the demand trends are weakening in North America and Europe. Tata Chemicals see signs that pricing has bottomed out. So this suggests potential stability and upside for the stock despite the current global challenges. The Indian government has introduced the Jan Vishwas Amendment Bill in the Lok Sabha. Now, this aims to boost ease of doing business and living. Now, the bill has been referred to a select parliamentary panel for review. The legislation seeks to amend several enactments, decriminalize and rationalize the minor offences. Over 300 minor offences are expected to be decriminalized under Jan Vishwas 2.0. Now, as per the bill, first-time offenders will receive only an improvement notice with no penalty, and penalties will be imposed from the second offence onwards, similar to the provisions in the Jan Vishwas 1.0. Now, this amendment builds upon the Jan Vishwas Act 1.0, introduced in 2023, which amended 183 provisions across the 42 acts. An Australian court has slapped Qantas with a record $90 million fine and about $59 million for illegally laying off 1,800 ground staff during the COVID-19 pandemic, marking the largest penalty under Australia's workplace laws. So the Transport Workers Union, which sued Qantas, will receive $50 million, while the airline's aggressive legal tactics drew sharp criticism from the judge. Google has agreed to a $36 million fine in the Australia for anti-competitive deals with Telstra and Optus, paying them to pre-install its search app on Android phones from 2019 to 2021, sidelining the rival search engines. So the Australian regulator says that this settlement actually boosts future search choice, with Google halting such deals as the federal court reviews the penalty. OpenAI's current and former employees are planning to sell approximately $6 billion in shares, targeting a $500 billion evaluation, which is a significant jump from $300 billion valuation in a recent $6.6 billion funding round led by Thrive Capital, SoftBank and others, including Microsoft and NVIDIA. So the tender offer reported on August 15 of 2025 aims to provide liquidity for staff, with SoftBank and Thrive as key potential buyers. OpenAI's weekly active users have also surged to 700 million, and its annual revenue run rate doubled to $20 billion from $12 billion. Now, the deal reflects the booming AI market but raises concerns about valuation sustainability amid unproven profitability. Camlin Fine stock falls 30% over the past month amid a challenging first quarter. The company's revenue also takes a hit, mainly due to weak demand in its specialty ingredients and straight segment. Annual maintenance shutdowns at the Dahej and Tarapur units also affect the production. So now the vanillin business faces a small revenue dip, adding to the pressure. EBITDA is impacted by low production levels, higher unabsorbed costs, and a one-time employee expense. So additionally, the company faces risk from Trump-era tariffs, which notably affect the vanillin segment. Camlin Fine is now focusing more on the US market to navigate these challenges. Mumbai is experiencing heavy rainfall today, prompting the IMD to issue a red alert. Considering the safety of students, the BMC has declared a holiday for all the schools and colleges in Mumbai starting from 12 noon today. The heavy downpour has caused waterlogging in low-lying areas, disrupting the traffic flow. The BMC administration has in fact urged citizens to venture out only when necessary and has also set up a helpline number 1916 for assistance and official information. Heavy rainfall in Mumbai has caused a retaining wall to collapse in Chembur, damaging 7 homes. The incident occurred amidst intense showers that have been lashing the city. A video of the wall collapse has gone viral, showcasing the moment when the structure gave away, sending debris crashing onto the homes below. So, the local MLA Sana Malik visited the spot to assess the damage and meet with affected residents. A devastating cloudburst hit Jammu and Kashmir's Kathua district, claiming the lives of 7 people, including 5 children. The tragedy occurred in the early hours of Sunday when torrential rains triggered flash floods in the region. The cloudburst caused widespread destruction, with floodwater submerging roads, lanes and bylanes. Several houses were flooded, causing damage to buildings, belongings and vehicles. Rescue operations were launched by the Army and Jammu and Kashmir Police, with teams working to evacuate the stranded families and provide aid. The Supreme Court, while hearing a case on Kerala's NH 544 toll suspension, slammed Delhi's monsoon chaos, noting the city halts after just 2 hours of rain. Criticizing a 12-hour traffic jam in Kerala, the court questioned toll charges and urged the NHAI to fix poor road conditions causing delays. The Lok Sabha today celebrated Group Captain Shubhanshu Shukla's landmark mission to the International Space Station, discussing its role in India's space ambitions for Viksit Bharat by 2047. So amid this opposition protest over Bihar's voter rolls, Shukla, who returned to Delhi, will meet PM Modi today, as 2 key bills were also introduced. US President Donald Trump, ahead of a White House meeting with Ukraine's Volodymyr Zelensky and leaders from the UK, France, Germany, Italy, Finland and NATO's Mark Rutte, declared Ukraine cannot join NATO or reclaim Crimea. So, annexed by Russia in 2014 as part of a peace deal to end the Russia-Ukraine war, Trump urged Zelensky to end the conflict immediately, aligning with Putin's push for a permanent deal over a ceasefire. Zelensky, backed by European allies, expressed confidence in securing NATO-style defense guarantees, as confirmed by Trump's envoy Steve Witkoff post-Putin summit in Alaska. Russian forces continue advancing in Donbass, with overnight strikes killing 5. Spain is grappling with 20 major wildfires amid a scorching heat wave, with temperatures hitting 45 degrees Celsius, prompting the deployment of 1,900 troops to assist firefighters. In Galicia, a massive blaze has shut down highways and rails, while desperate villagers fight the flames with buckets as fires devastate over 1,15,000 hectares this week. Myanmar will hold the initial phase of its general election on December 28, state television said on Monday, outlining a roadmap for the first polls in the war-torn country in nearly 5 years that have already been derided by critics as a sham. So the dates for subsequent phases of the elections, which authorities plan to hold over December and January for security reasons, will be announced later. Myanmar's Union Election Commission said that, according to an announcement on MRTV. India will back Surya Kumar Yadav as T20I captain for the Asia Cup 2025 in the UAE starting September 9. Despite Shubman Gill's 754 runs in England's Test series, he and Shreyas Iyer may miss the 15-man squad, with Sanju Samson, Abhishek Sharma and Tilak Varma favoured for batting roles. Jasprit Bumrah, cleared after a knee injury, will lead the attack, while Mohammad Siraj is likely rested. India's campaign begins against UAE, followed by Pakistan on September 14, with a potential final on September 28. Rajnikant's coolie has stormed past 300 crore rupees worldwide in just 3 days, outpacing Bollywood hits like Sitare Zameen Par and Houseful 5 with a domestic net of 158 crore rupees and over $15 million overseas. Directed by Lokesh Kanagaraj, the film is now the fastest Tamil movie to hit this milestone and is gunning for a 600 crore rupee global run. With that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit and don't go anywhere.
Sandeep Tandon, founder and CIO of Quant Capital, now joining in to help us make sense of everything that we're seeing. Sandeep, today is a day for the believers, isn't it? Those who over the last few months, which have been quite patchy, dug in and thought that yes, India will respond in a way that bolsters the domestic economy. What would you do if you were sitting on the sidelines today? And how do you look at all of the events of the last 72 hours or so?
See, obviously the background was perfect. We have been talking about the FII short position is significantly large. Sentiments, if you really look at because of that Trump-related tariff or noise which is there in the markets, obviously people were slightly anxious, so the overall exposure was low. So I think it was more of a confidence crisis which we have seen in last 1 month. That's the reason India underperformed both from emerging market perspective and developed market perspective. And obviously now this boost has come, a bazooka sort of thing, which announcement has come. So obviously it is very domestic centric. I think government has taken right step. Industry has been talking about rationalization of GST for a while, but nobody expected it will come with this manner. And that's the reason market have obviously rallied. So people will be forced to cover the short position and some confidence will come back, which was slightly missing. So I think that it was a background which was there. That's the reason we are seeing this reaction. The challenge is what we have to see, how quick it will be implemented, what happened in next 2 months' time, 1.5 months' time, whether people will defer their decision, or particularly four-wheelers or two-wheelers or heavy item, where household item and the food item, you can't make any deferment plan. But can you defer it? So whether buying will come with a gap or some sort of lag. That's what we have to see, but as of now, obviously, it's a great sentiment booster, and we hope that consumption will pick up.
Sandeep, of course, Sandeep Tandon from Quant Mutual Fund with us. And Sandeep, the question would be, would you preempt no big negatives on the global front and position your portfolio towards consumption and be largely invested, even if you had some cash, let's say, ahead of this event? Now, would you change that course?
See, if you analyze, Miraj, our portfolio, we have been largely domestic centric. We have been avoiding these global exposure, except pharma, because pharma we strongly believe, America also does not have any choice but to buy from us. So if you exclude that thing, largely domestic centric thing, and obviously consumption which was slightly affected, and if this can be a booster. So I think it's a more of a confidence boosting exercise rather than saying that number will be visible on immediate basis. I think there was much needed support because capex was getting deferred. People were not willing to take any action or any steps on this. So I think some clarity will emerge, but I think it's too early and too premature to really celebrate. Let's see, look at the fine print doesn't come, but directionally is definitely very powerful.
Sandeep, in agreement with the kind of direction that the market has seen as the biggest beneficiaries, your EMS players, your consumer durables, your autos at the forefront of this?
So obviously auto is definitely consumer durable also, but in consumer durable and in select auto also, we have to look at the concern which we have in the market for last if you look at the last numbers, and most of the companies have talked about inventory, So you have very large, meaningful inventory in the system. So that also has to be cleansed first. Then, so that could be a very challenging phase, whether those inventory at the dealer level, whether inventory at the company level. So because the GST angle comes into picture. So I think that also has to be cleansed. So that is a very important thing. And as I was saying in the beginning, that the people will defer the decision. See, in food, you can't, okay? But in heavy items, whether it's auto or consumer durable, also to certain extent, people can defer. So we have to be very careful. I think my personal assessment is that since government has already made this announcement, logically, they also understand the situation. So logically, they should be making this announcement much before the Diwali itself, maybe much earlier. Maybe one can quantify and define it. This is the Diwali Dhamaka which we have, or the gift which is coming. Now we have to also understand what balancing acts come into the picture, because very large amount of 28%